Spent the last 3 or 4 years squeezing the lemon and taking it the most we could do, and now they're going to start saying, well, hang on, how do I keep up? And I think this is, for us, an opportunity to show the degree of the transformation and show what is there. In a way, it's almost better if you don't do acquisition, because nobody can say, oh, well, yeah, they grew because they did acquisition. For us and for the team, if we can deliver that plan over the next 3-4 years, that's exciting.
But on the UniCredit performance, how do you mitigate lower interest rates?
Well, look, I think we look at it this way. First of all, I would say we're now united, we're strong. We have very high capital, we have very high provisions. This is a strong bank, but it's highly unified, highly empowered. I'm really excited about what we can do. The second thing is, I don't think any other bank kept overlays, which are fundamentally a provision to be used anti-cyclically when the cost of risk goes up, of 1.7 billion. So if cost of risk goes up in Europe, we're fine. If cost of risk doesn't go up in Europe, we will release 1.7 billion into our results. Secondly, we have been told, oh, you distributed a lot of equity out and a lot of distribution. We did. We distributed almost more than 25 billion over 3.5 years. But we also generated 6.5 billion of additional capital. So we have excess capital of 6.5 billion. No other bank has that much, and that's 2. 3, another buffer. These are what I would call lines of defense. Every year in the last 3.5 years, we have worked on transforming the bank, and we've taxed our P&L by taking integration cost, about 1 billion a year. But now in the next 3 years, we don't need to take them. And so when you look at that, these are the lines of defense. But what I think people missed, because with rates up, everything floated, is not only the degree of our transformation, but if you look at UniCredit, we have an exceptional geographic mix with 40% in Italy, 35% if I take in Germany and Austria together, which have a certain anchoring, and 25% in CE. And in terms of client, everybody goes around, and you will now understand the strategy. We have about 65% of our clients are either SME, affluent, or private. And we're trying to develop that. So we worked very hard to leverage on these strengths, on being as effective and efficient as we can on these strengths. And last year, instead of spending the usual 6 months on budgeting, we spent 3, and then we spent the other 3 on how we're going to make it happen. Does everybody down the organization knows how to execute? And we're confident. Yes.
Andrea, in terms of capital distribution, I mean, you said it won't be touched no matter what happens with acquisitions.
Well, I think
Can you give us a bit more of a glimpse?
I think it depends. But what does it depend? First of all, we've increased again the dividend payout to 50% on net income. Yeah. We started with 35, now we're at 50. That will not be touched. As they say in the industry, this is sacrosanct. Then we have the share buybacks, which are composed of ordinary distribution and excess capital returns. The entire excess capital we have committed to go back to 13% and to distribute it back by 27. So you're looking at 25, 26, 27. 6.5 billion need to go back in the pockets of shareholders, in addition to the share buyback that is ordinary. That allows us to say with confidence that not only the dividend will be higher than what it was in the last few years, the dividend per share will be higher, much higher, but also the total distribution that this year we have guided to $8.5 billion will be much higher than this year in the next 3. Of course, if we do M&A, we have also said we will strive to keep the dividend per share unchanged to protect our shareholders. But part of that share buyback will, instead of going to buy our shares, to buy the shares of a target.
Okay, final question. 2024 was a whirlwind, frankly, just following the news from UniCredit. Do you think by the end of this year you'll be much bigger through an acquisition?
I am optimistic that we will, actually.
More than 50-50?
More than 50-50.
We have to leave it here, but I have so many more questions. Commerzbank or the other one?
I don't know. We'll see.
Okay. A good sport. Andrea Orcel, thank you so much for joining us.
Thank you very much, Nancy. Thank you.
So that's it for the morning program.
It's nice to have options, isn't it? Europe's boldest banker, you could argue, in conversation with Francine Lacroix. He, of course, is Andrea Orcel, the CEO of UniCredit, joining us from the Bloomberg House in Davos. Let's talk about what has been happening while we've been watching that event in Davos. European equity markets have opened. What you are seeing, basically, is a mix of domestic factors, certainly here in the UK, that is well represented, but also a very big Trump effect coming in through these markets this morning. As you can see, the FTSE 100 barely higher, the CAC 40 barely lower, but below the surface, there's some really big moves happening here. Some are domestically generated, but many are Trump-generated, Anna.
Yeah, absolutely. Let's take a look at some of the sectors that are reflecting that. And certainly when it comes to wind generation, that's a sector that's under pressure. Orsted in focus because of an update it's done around its business specifically, but the whole sector under pressure from some of the lines that we heard from President Trump yesterday. Away from that, we also see weakness in the auto sector. Autos and parts is down by 0.9%. Stellantis, the worst performer there. And that was one of the companies cited as vulnerable if we do see these 25% tariffs on Canada and on Mexico on products coming into the United States, because of course they import so many of their cars and parts for them into that market. So that's a sector in focus. Plus we have the European car sales. On the banking sector as well, we're watching the UK banks because of some interesting news lines coming out of the FT and elsewhere that are suggesting that we are going to see the Treasury step in to protect the banks against some legal action surrounding car insurance sales. So Lloyds Banking Group up by 4% as a result of that.
You talked about the outperformers, let's talk about the underperformers. You are seeing commodities on the back foot here, and I thought this was interesting given that you are seeing LNG prices, for example, the natural gas futures, the Dutch natural gas futures actually higher when the entire commodity sector is down. Usually when you see that dispersion, Shell tends to be an outperformer. Today you are seeing the opposite. Some of your big index weights on the FTSE are your Glencores, your Anglo Americans, your Rio Tintos, Shell as well down there. I'll also mention very quickly, we talked about the Trump read-through. A lot of pain in Spanish stocks. They're down about 0.6% relative to a fairly muted market across the board. You could argue that's the Mexico read-through into that sector.
Can I also just flag Novo Nordisk and LVMH? Because actually I think there's a Trump story there as well. LVMH, for instance, the luxury trade into the United States, there's significant concern around the fact that we could see European tariffs being applied by the Trump administration. Barely a mention of Europe. Yes, we're maybe talking about this universal tariff that has been discussed by the incoming administration, but no detail on that yet. It's North America first right now. That's where the focus lies, and therefore maybe Nova gets a boost off the back of that, LVMH gets a boost off the back of that.
It's really interesting how we turn North America first in terms of his focus into, well, that's okay then for China and
the rest
Europe.
of us, we're fine.
You know, for the next 5 minutes maybe, but we'll see what happens in 10 minutes.
There was also Diageo was underperforming, Mercedes-Benz was underperforming. We talked about the automakers. You flagged this earlier as well. Stellantis is going to be one in focus. There are certainly, it is North America first, but the ripple effects are very much here in Europe.
Absolutely. Fascinating to see kind of how the market is dealing with all of the details around this. We'll show you the gilt open as well. Gilts are now trading on the back of the wage data. We'll come back to that in a few minutes' time, Critty, and talk about what's going on in the UK.
Yeah, absolutely. But I think it's fair to say here in the UK, around the world, a lot of the focus is what's happening out in Washington, D.C. That extends even to Davos. Let's go there now. President Donald Trump, of course, as we said, saying he plans to enact previously threatened tariffs of as much as 25% on Mexico and Canada as soon as next month. Trump, of course, making the comments as he signed dozens of executive orders on his first day back in the White House.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. during every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored.
Let's get more of Bloomberg White House reporter Jenny Leonard, who, of course, is joining us out of Davos. Jenny, is it fair to say the focus in Davos is what's going on in Washington?
Yeah, it certainly is. And Davos is really getting underway today. So I think we'll see the reaction to some of the executive orders that the president signed on his first day in office, and obviously the things that he didn't do. We saw, yesterday a slew of things that he promised on the campaign trail that he delivered on. The biggest surprise, however, I would say, is that he didn't go with tariffs on day one, which he had, of course, promised day in and day out on the campaign trail.
Yeah, Jenny, let's talk about tariffs. Let's talk about trade. So Trump's saying that he is minded to put a 25% tariff on Mexico and on Canada. And then when pressed said, yeah, well, maybe February 1st. How is that kind of line around tariffs and nothing on China yet going down in Davos? Yeah.
Well, we'll get a lot more reaction today. I will say it's interesting that he went for the Mexico-Canada tariffs first and sort of established a deadline that is a little bit different from the executive order he signed, where he established sort of a study writ large of every single trade agreement the U.S. is part of, so that his cabinet secretaries can essentially by April 1st say, hey, we should stay in this, or hey, this is what we recommend you do. Of course, that also plays into none of his secretaries on the economic front have been confirmed. So, the meetings on trade can't really happen the way they would if they were already in those agencies. On China, however, it's really interesting that he has completely abandoned his hawkish tone from the campaign trail. We reported he's really in negotiating mode. He is interested in traveling to China. He's interested in maybe making another deal with Xi Jinping. He is obviously keeping his options open, as he always is. But I would say that a lot of people really expected him to at least go with the tariff he promised on China for its production of fentanyl and its precursor chemicals, and we've seen none of that.
Jenny, is that the surprise? And what do people do with it? We thought we had a handle on what was going to be happening here, yet we get a press conference in the middle of the night, European time, that throws out all kinds of surprises. What are people saying about what happens next and the volatility that comes with it? If Trump is in negotiating mode, that implies quite a lot of volatility. Is that what people are now expecting?
Yeah, I think they are expecting that, and they should expect that. If you think about 2017, when he took office the first time, we see a lot of parallels right now. He is talking about going to China. He did that in 2017. If you remember, he signed deals with Boeing and other companies while he was on the ground in Beijing. He seems like he's open to doing that again right now without talking about the broad tariffs that we've seen. He is, however, also talking about looking at the U.S.-China Phase 1 trade agreement, which we have reported for years now that China did not live up to it. So that's basically him creating a pretext, if he wants to use it, saying we're studying if China's complying with it. And if it's not, we will take action. And that action can range from, as we've seen over the last 8 years, from we're making deals, we're banning TikTok, we're not banning TikTok anymore, we're going into a trade war, we're signing a massive trade deal. So volatility is, I think, the name of the game for the next 4 years.
Absolutely, and we're going to get used to it, and it's going to be quite the ride. Jenny Leonard, White House correspondent for Bloomberg, joining us from Davos. We'll see what President Trump has to say over the next 24 hours. Davos certainly tuning in. Let's talk about how the markets are tuned into this story this morning. As I've already indicated, we are seeing some pretty significant differences emerging in how the equity markets are responding to the Trump trade this morning. Broadly, though, as you can see in terms of the core six, quite a positive picture. Novo's up quite nicely. LVMH is having a relatively good day. Ferrari not looking too bad. It could be exposed as well, you could argue, to Trump tariffs, which haven't emerged yet from a European perspective. Elsewhere in the market, though, we are seeing some weakness coming through. You are seeing the car sector broadly under pressure. You are seeing, obviously, the wind sector seeing some significant turbulence. We'll come back to those stories as we work our way through the rest of the market session here in Europe. But what have we got coming up next from Davos?
Yeah, coming up from Davos, then, Guy, we'll return to the slopes. We'll be speaking to Rafael Grossi, Director General of the International Atomic Energy Agency. That is live. That's coming up next. US futures pointing a little bit higher, flat to positive this morning in their first response to Trump. We'll get more on the markets, of course, as we go through the program. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back to the opening trade. We are 17 minutes into Europeans' equity session and a first chance to react to the flurry of conversation starters we heard from President Trump in the United States yesterday during his inauguration, his more informal address after the inauguration and his executive orders. All of that added up to actually European equity markets that are pretty unmoved. The FTSE making some modest gains, financial services, banks in focus, more on that in a moment. The CAC 40 is flat, the DAX is down by 0.1%. So that's the overall picture. Let's cast our minds forward to US futures, and this matters more perhaps than usual because, of course, US markets were closed yesterday. And so, yes, for the United States, this is also the first chance for these markets to react, stock markets at least, to react to what we heard from President Trump yesterday. And so we see yields coming down a little bit. We see US futures moving higher. Dow futures, E-minis and NASDAQ futures just a fraction higher this morning.
It's really hard to gauge what's going to happen and how the next few days are going to be taken by these markets. Really hard to read into a reasonably neutral inauguration and then a far from neutral press conference delivered by President Trump a little bit later. All of this, though, certainly having an effect, you could argue, in Europe this morning. Let's take a look at some individual sectors. The wind sector is certainly front and centre right now. The energy sector also certainly being watched very, very carefully. As you can see, we are seeing some big moves already. Vestas down hard, 4.5%. Ørsted updating on its story in the United States going forward from here, which just looks more and more difficult. The numbers coming out really being taken badly by the market, and more pieces of bad news emerging for this business. The stock down by 15%. The Trump effect in Europe certainly manifesting itself within the energy sector.
And certainly another sector that we're going to keep an eye on is autos as well. You are seeing a lot of the stories in terms of BMW, Volkswagen, even Stellantis really taking a beating. That Mexico piece, Anna, is going to show up in the car makers.
Yeah, absolutely. We'll watch that. And financial services and banks in focus here in the UK. Financial services, because Aberdeen, the money manager, up by 7.5%. This on the back of some better flows data coming through for that particular business. And some in the banking sector expecting some kind of reprieve against some legal action they were possibly facing on car insurance sales. Lloyds Banking Group and Barclays up with that in mind, Guy.
The morning certainly underway in Davos. Let's talk about what is happening there. We join now a conversation. Bloomberg's Lisa Abramowitz is standing by with another great guest. Lisa, over to you.
Thank you. Thank you so much, Guy. Right now, I have to say, we are at the cross sections of this energy transition at a time where a lot of executives here are so concerned about what could happen with armed conflict. With me now is someone who really is at the cross sections of both of those issues. Rafael Grossi, he is the Director General of the International Atomic Energy Agency. And Rafael, thank you so much for being with us.
Great to be with you.
I want to start with one of the sides of your mandates that we haven't talked about as much over the past couple of years, and that is the energy side. Donald Trump, President of the United States, declared a national energy emergency as a result of the need for AI technologies, but also to prop up oil and gas sectors in the U.S. Do you see nuclear energy being a part of that?
Well, it is. Certainly, what I see is a return to realism, is the fact that people are recognizing that without the contribution of nuclear energy, many of these things, including, like you're mentioning, the important, indispensable AI contribution to our economy, is going to be impossible, if not too difficult. So nuclear energy is a base load energy, is a reliable energy, is dispatchable energy, and it's something that we know how to do. So it has been done, it is there, but we see the need to increase, some say triple, the present percentage of nuclear energy in the world. We will have to see about that, but what is clear is that this is happening.
Is the template what we've seen with Microsoft and 3 Mile Island, the idea of restarting old plants to get them on board in order to fuel certain tech companies? Or is that just a one-off with a number of select situations?
It's wider than that. Certainly that is a very good example, but we see other high-tech companies, Google, Meta, OpenAI, you name it. Hardly a week passes without a new agreement being signed by one of these companies with nuclear sector producers and builders.
I was looking at a study that showed that it's taking a disproportionately long time, and it's taking a disproportionately expensive amount of time to create nuclear power plants.
This has been the case because we haven't been building nuclear power plants, at least in the West, for many years. In the 1970s or 1980s, we were checking them out by the month. If you look at it, in the United States, we have more than 90, almost 100 nuclear power plants in France and in other places. But then that stopped for a number of reasons. And of course, you have to reconstruct the supply chain. You have to do a number of things. If you look at other parts of the world, for example, China, where at the moment, as we speak, they are building more than 20 nuclear power plants on top of the 30-something they have, and then they come cheaper and faster. And this is because the process has continued. And what I see now is that this is, of course, coming back here.
Are they less safe, though?
No, they are perfectly safe. One of the jobs of the IEA is to make sure that the nuclear energy in the world respects the highest safety standards. That is one of the functions of my organization.
So one of the questions I was going to ask you is which countries are getting it right? Do you think that China is the template, in a way, for the West to follow?
To say the template, I wouldn't say that. I think that they have taken the decision that, in the palette of energy alternatives they need to have more nuclear. They have a proportionately much less proportion of nuclear. In the United States, you have around 20%. In China, it's less than 5%. 5%. So all this build is because they are catching up.
The other side of your mandate is the one that keeps me up at night, these sort of existential risks around nuclear war. And I am wondering, at this point, CEOs at Davos have indicated that an armed conflict is their #1 concern heading into the next year. How much closer today are we to some sort of use of nuclear weapons with Russia and Ukraine, or even with Iran, than we were, say, 6 months ago?
Well, we have to make sure, and the IAEA is one, not the one, but one of the factors, one of the tools the international community has to make sure that that doesn't happen. And that you do through the non-proliferation regime, the set of norms and practice and guidelines that are there to make sure that all of these positive things that we're talking about, all this nuclear material that is there to prepare our economies and to have all this prosperity, is not used, is not deviated to nuclear weapons use.
Well, do you see that the acceleration in uranium production, nuclear-grade uranium production in Iran, which was something that we saw over the past couple of months, has that continued? Does that concern you?
It continues. It continues. It is really high time we go back to some framework for what is happening there. You cannot have a country that is enriching uranium at this pace, at those levels. It's, by the way, something I've discussed with the Iranian government. I was, last year in Tehran discussing with President Pezeshkian and with the foreign minister and others, and I think there is a clear conviction, at least on my part, that this is something that needs to be put back on track. And I'm looking forward to engaging very, very soon with the administration in Washington to look into ways and means to get to that.
Well, I was just going to ask, what could the Trump administration do that you think would increase the chances of that framework to rein in some of that?
Well, it's clear for everybody. We are engaging, of course, with Russia, with China, with the European countries, but it is clear for everybody that the United States is indispensable in bringing this whole compact of issues into a logical whole. So there was an agreement that existed before. President Trump decided that that was not the path he wanted to follow. So now we need to come to terms with how to deal with this, excluding, of course, war. We don't want more wars. President Trump has said that. So what we need is to find an understanding, a way for Iran to do civil nuclear and to have that in check. And this is going to be our mission in the next few weeks.
Rafael Grossi, thank you so much for being with us. I could speak with you all morning. Rafael Grossi, Director General of the IAEA. Kriti, Guy, Anna, back to you.
Lisa Abramowitz there in Davos with the head of the IAEA. We thank you so much. And of course, a stunning backdrop that we are seeing. We're not done with Davos. We've got plenty more in the program. And of course, later throughout the week, we're going to head back to Switzerland in just a few moments, speak with Benoit Bazin, Chairman and CEO of the construction materials maker Saint-Gobain. That conversation happening next. In the meantime, these markets, they seem kind of subtle here. You are seeing some slight outperformance in the FTSE 100. Marginal moves to the upside in the French index as well, but an underperformer in those Spanish stocks. That Mexico read-through showing up in quite a big way. We're going to dive into the markets and, of course, the Trump impact in Davos shortly. Stick with us. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change, In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
This is the opening trade. We're at 30 minutes into today's session. On the surface, you are seeing some pretty flat trades here. The stock 600 is flat. The outperformer, though, is the FTSE 100 at the bottom of your screen, higher by about 0.2%. The crucial underperformer is actually showing up in the Spanish index, down a whopping 0.7%, and the selling continues. A lot of that guy likely to be a little bit of a reaction to the Trump trade and the Mexico comments.
The Trump trade is all across these markets this morning. You can see it in so many corners of the European equity space and elsewhere. There are, though, some other pieces of news that we've been paying attention to this morning. It was fascinating listening to the banking panel and also Francine's conversation with Andrea Orcel, talking about the challenges of putting large European banks together. Those challenges apparently are a little easier to navigate when it comes to the asset management industry. Generali and BPCE this morning reached a preliminary deal to combine their investments unit. This effectively creates the second largest asset manager in Europe. So deals can get done. Banks seem to be where the challenge lies. Asset managers look a little bit easier to do deals in.
Yeah, we had a lot from Andrea Orcel on that front, didn't we, and what he thinks is going on behind the scenes. Let us go to some of the other areas in these markets where we see evidence of that Trump trade. Let's take a closer look at Trump's executive order blitz, his inauguration, all that he had to say yesterday, what that means for markets, and we'll do that firstly through the lens of the dollar. Bloomberg's Valerie Teitel joins us now, and the dollar really whipsawed in the last 24 hours then, Valerie, based on expectations around tariffs and where they might or might not fall.
Yeah, I think it shows us a few things. One is that the market was overly long dollars, and the fact that we didn't get any hard and fast and no shock and awe tariff announcement coming from Trump just paved the way for a weaker dollar. Now, we did get that hint from Trump in the Oval Office when he was talking to reporters, talking about that 25% tariff on Canada and Mexico. So that trade has come back a bit. So he, I guess, failed to do any shock and awe when it comes to trade. He also failed to mention any cryptocurrency, anything in the executive orders when it came to the cryptocurrency sphere. Remember, Bitcoin hit a new record high yesterday on anticipation that there could be some market-friendly, cryptocurrency-friendly executive orders. We didn't get that yesterday either. So maybe the market is a bit more focused on what we did not get from President Donald Trump. It's only day one, though. Let's see what day two has in store for us. Volatility is the name of the game at the moment.
Volatility is the name of the game, and announcements coming at unusual times of day. We remember it from the first Trump presidency. No doubt it'll be a feature of the second. Valerie, thank you very much. Bloomberg's Valerie Teitel with the things that were and were not said by President Trump yesterday and what they did to markets. Let's get back to Davos. Bloomberg's Francine Lacroix is there, of course, and can talk a little perhaps about the construction sector and how it's handling a new Trump presidency. Francine.
Hi, Anna. Good morning. There's a lot to talk about, of course, how the chief executives here in Davos would deal with possible tariffs. I'm delighted to be joined by Benoit Bazin. He's chairman and chief executive officer of the construction materials maker Saint-Gobain. Thank you so much, Mr. Bazin, of joining us here in Davos. No doubt a lot of the chief executives that I met were looking at the inauguration yesterday. Do you worry about inflation and tariffs, and what does that mean for the construction industry?
In the US, it's actually our #1 country for Saint-Gobain in terms of profit pool. We invested a lot in the last years, more than $7 billion. We are very local by nature, so we are not much impacted by the tariffs. We have 130 plants in the US. We produce materials locally and we sell locally. Housing is a big need in the US, will be supported by a good US economy, so I'm not worried. We had a good run in the last years, and I think it's going to continue.
So does that mean that when you look strategically at where you want to grow, the US will be one of your main markets? And does that mean that you could also grow through acquisitions in that market?
Correct, because we have transformed Saint-Gobain in a big way in the last 5 years. We reshaped 40% of our turnover in and out. North America was a big strategic investment. It went from 10% to more than 20% of our sales, 37% of our profit. So yes, North America will continue to be significant. Altogether, 2/3 of our profit now comes from North America, Asia, and emerging markets, and 1/3 from Western Europe. So geographic expansion of Saint-Gobain will continue to be on the agenda as #1 priority, including in North America. We tripled our size in Canada in the last 3 years. So Canada, US, even Mexico recently, we made a large acquisition. So yes, North America development will remain on top of our priority.
But that means that you could also look at a further acquisition in North America if you see at the economy, at the growing rates that are expected. Is that going to actually be at the expense of the rest of the world?
We have been very active around the world, in North America through acquisitions, but also organic growth through CapEx. We had $400 million of growth CapEx as we speak, starting a new roofing line, a new plasterboard line in Florida. But we also made large acquisitions around the world. The largest in 20 years of Saint-Gobain has been in Australia. Last year, we are #1 now in building materials in Australia, also a growing country with population growth, immigration. We have an acquisition that we are about to close in India, Middle East, Fosroc, because we grew a lot in construction chemicals, Mexico, Middle East, India, Asia Pacific. So it's all around the world. We have a very solid balance sheet for Saint-Gobain, and last year we made roughly a bit more than 5 billion euros of acquisitions, and we are in good shape to continue.
I was going to ask you about Chryso and the fact that you are more and more actually going into these chemicals construction. How big will that be within the group? Do you want to grow it to a sizable size?
It's already sizable because we are at 6.5 billion euros pro forma sales. It's 2.5 times more than what we had 4 years ago.
But percentage, it's still quite small.
Well, it's growing fast. It's already 12-13%, and it's even more in the profit pool. And yes, we have a plan to grow much bigger than that in the next 4 to 5 years. Why is that? Because construction chemical is at the heart of our strategic vision, worldwide leader in light and sustainable construction. Those additives provide performance to the building materials and sustainability, so we'll continue to be active on construction chemicals within the geographic development of Saint-Gobain worldwide.
And of course, this also helps with a lot of emissions, but if the world is turning towards a more Trump-like era, does that mean that emissions won't figure quite as much in terms of the top priority list when you build materials?
You know, the green value of buildings is there. It could be energy efficiency, it could be carbon embedded, it could be recycled materials. It makes the buildings and the building materials more efficient. So for me, sustainable construction against extreme weather, unfortunately we have seen the impact in the US, we have seen the impact in Spain. Sustainable construction, it's good for the building owners in terms of value. A good value is brought by better energy efficiency. A good value is brought to the insurance by resistance against extreme weather. For instance, today in the US, we have roofing shingles that are paid back by the insurance if they are better mix, better product against extreme weather, hailstorm, hurricanes. So sustainable construction, it's not about just CO2, it's about the benefit to the people against energy efficiency, against extreme weather. So it's all going to continue because it brings value to the owners, whether it's in the US, in Canada, in Europe, or in India.
I mean, I imagine this is more for new constructions. What about retrofitting? So when you take an old building and actually you make it much more greener to save energy, do you see the pace of change in retrofitting going the same way as it did before?
We have to double or triple in the next years. I give you just one figure. Last year in France, and it's official statistics from the conveyancers, and it could be true the same in the US, there was a 25% discount for the bad energy efficiency buildings and a 20% premium from the good energy efficiency. It's the same in the US. You would not buy a house with lead painting, with asbestos in it. You will not buy a house, or you will buy it with a discount if it's leaking on energy. So again, the value of good buildings, not only for the benefits of comfort for the people, well-being, acoustic in a classroom, visual light in an office, is there to stay.
How much is the cost of energy weighing on your profits?
Well, we had a very good run in terms of price-cost spread within Saint-Gobain. We increased the margin, and 24, it's not yet public, but we already said that it will be a record margin above 23. So every year in the last 4 years, we did run Saint-Gobain with double-digit margin and increasing the margin year after year. So we have been able to cope with inflation on energy, inflation on materials. So we are with solutions, value added for the customers, and therefore able to cope with any up and down in the energy.
But where are you expecting energy to go? Again, the Trump administration could unleash cheaper energy through producing more oil and also LNG. Is that helpful for a company like Saint-Gobain?
The energy cost is lower in relative terms in the US than what we have in Europe. So it can bring more benefits going forward, but altogether, again, it's not the #1 criteria in terms of the cost breakdown within Saint-Gobain, and we know how to cope with it. We have hedging in Europe when it's a bit volatile. If it's a bit cheaper in the US, why not? We are moving towards green energy. We decarbonized 45% of the intensity of Saint-Gobain in scope 1 and 2 of CO2 in the last years. We'll continue, because it's good for Saint-Gobain in terms of competitiveness, in terms of commercial differentiation. When you have an offer to a building owner, corporate world, president of a university in the US, they want to attract better students, better teachers with a good building, not only in terms of acoustic, not only in terms of air quality, but also in terms of the embedded carbon. It makes a more attractive place to study.
I haven't really asked you about inflation, the sticky kind of inflation, not the one by tariffs. Is that your biggest concern for this year?
Well, it's moving down. So we will see interest rates coming down from the central banks, which is a bit helpful towards the economy altogether. So I think we'll see a bit more of that. We saw it in Canada recently. We saw it with the Fed. We'll see it with the ECB. So I think it's moving in the right direction. So the worst is behind, clearly within different countries in Europe. Step by step, we are moving up now to positive territories in terms of volumes of activity. We saw it in Eastern Europe. We are seeing it gradually in other countries.
Benoit Bazin, thank you so much for joining us. That was the chairman and CEO of Saint-Gobain. With that, I'm going to send it back to you in London, and of course, we'll have plenty more throughout the day.
We certainly will. Francine, thank you very much indeed. Much more to come from Davos as we work our way through the session. We're going to be heading back there very soon, actually. A conversation coming up with Mistral AI's CEO. Arthur Mensch is going to be joining us shortly. The discussion obviously centering around the developments in artificial intelligence, what's happening with chatbots, what is the next step that we are going to see? How does the energy story fold into all of this? That's coming up next. This is Bloomberg.
How do we reach down to the 18 to 35-year-old market? How do we bring these kids, these influencers, this new generation of people interested in the game of golf. There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670 odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with, right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't, we're owning this space.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. This is the opening trade, 8:44 here in London, 9:44 if you are in Davos. Welcome to the programme. The European equity market picture then looks like this. Modest gains, really modest gains in some places across these markets. Flat to positive then for European stocks. Basic resources, the weakest performing sector, autos and parts also under pressure. Perhaps some Trump effect in there. And the EV sales numbers lackluster. They came through early hours this morning. Financial services to the upside along with banks getting some gains there from some interesting UK and corporate news flow. Now, the transformation of business in the age of artificial intelligence is one of the themes at this year's World Economic Forum. Let's get back to Davos, back to Francine, who has another guest with her, this time to talk about AI.
Yeah, Anna, thank you so much. We're joined by Arthur Mensch, the co-founder and CEO of Mistral AI. I have to say, this is one of the companies that most chief executives want to know more about, but also meet the co-founder, Arthur Mensch. Thank you so much for joining us. Look,
thank you for inviting me.
You really are the talk of Davos, because so many people want to try and understand whether you can, with Mistral AI, really be a rival to Anthropic, DeepMind, and all of these other generative AI companies. Do you feel a bit of weight on your shoulder?
Well, I think we do have some weight on our shoulder in that we are the only European company that is providing what we provide. We have made some great progress there, and we have a lot of customers. And indeed, that's one of the reasons why we're in Davos is indeed to continue developing that aspect.
So how is your big business developing right now? How many customers do you have, and what's the target?
It's developing in Europe. It's developing in the US as well. We feel a blank space there because we have. We have the customization, the portability of our platform, the capacity to deploy on VPC, on premises has been critical to many of our customers in the US and also in Europe. So we've been growing in those two regions. And one thing that we're announcing actually today is that we're also growing in Singapore, where the concerns around data governance, around sovereignty as well, are also strong. And that's something that we've been addressing.
What's your biggest challenge in going against competitors, formidable competitors like OpenAI, but also Meta and Anthropic?
Well, I guess the challenge, but also the opportunity, is that we're smaller than them. Which means that we have less coverage. But when we engage with partners in Europe, when we engage with partners in the US, we go in depth. We work with them. We train models together. We train systems together. We understand their problem. And so that has been critical for growing. That's what we need to continue. We're scaling our breadth, but we still want to be in depth. We have a solution team engaging, finding solutions, and going all the way to the delivery.
I mean, some of the biggest AI companies, of course, are rushing to raise money. How's your fundraising going?
Well, startup is always raising money, but we have plenty. We've proven that thanks to the talent we have to be more efficient than the others. We have a lot of compute, but we have less compute than our competitors. We still have managed to produce state-of-the-art models in different sectors. And so that's what we need to continue doing. We will obviously be continuing to accelerate, and that might require new fundraising.
But you don't need fundraising right now.
No,
you're all set for a bit.
I'm not in Davos to fundraise.
Okay, so what are you in Davos to do exactly?
So we're in Davos to grow, to meet our customers, existing customers, new prospects as well, to meet our partners, the cloud partners we have, the GSIs that we're working with. So I'm meeting with Capgemini, who we're working with. I'm meeting with Microsoft. I'm meeting with all of these people.
How often do you get asked whether someone can take you over? But do you have the big companies?
That's a question we have oftentimes. We didn't start the company. We left big tech, big US tech to create a company in Europe to show that Europe had something to say, and that's still the project. And so the independence we have is something that we value dearly.
So you're not for sale?
We're not for sale.
Would you IPO?
Of course, that's the plan.
So how much do you think you're worth right now?
Well, I guess that's the investors to say, but the rate of growth has been quite tremendous. It's been hard to keep pace with in terms of growing the team in particular, and so no, that's everything is going on well.
Arthur, are you ever frustrated that you're based in Europe? I know there's, you seem to take in like a badge of honor that actually you're European trying to fight some of the Americans. There's worried about regulation, competitiveness. Do you feel you're supported enough?
Well, I like to look at it from a positive point of view. Europe has a lot of strength, in particular the talent pool it has access to. The people that are building AI, including in the US, are actually mostly Europeans. And so the opportunity we had, and that's also the thing that we provide to our customers, is the expertise. And I think Europe can come together today and realize that we've been innovators. We're a continent of innovators. We need to keep being innovators. And AI is an opportunity to continuously innovate. There's a lot of other companies that are building that. I'm thinking of ACML. I'm thinking of all of the AI startups that we're working with in France and in London. And so let's not look at the bad things. Effectively, we have a tendency to play a little too much referee in a $1 trillion race. But we have the strength, and we just need to have the will to create in Europe and to innovate and create value there.
I mean, do you think that there's a first mover advantage in this industry, or is it really execution and innovation that will win?
I mean, as in any industry, you have first mover advantage, but the AI is going to be a revolution. It's going to be a long-lasting revolution. It's going to take decades to actually be rolled fully to enterprises, rolled fully to the way we actually behave and the way we actually deal with computers. So, and a lot of things, and we're realizing that enterprises are a bit struggling with realizing the value of AI, and that's where you need to partner deeply with someone that can help you get the expertise, distill the expertise of your company into AI systems that can then help you drive the productivity that you're expecting. So we're only 5% there. And so everything that is sitting on top of model, all of the orchestration part, all of the managing data, all of the customization part are things that we still need to figure out. And I think we have a very good head start there.
Well, that's incredible. If you're at 5%, I mean, there's so much that actually can happen and change and transform.
Yes, that also makes it challenging. We need to innovate constantly to change the way our models behave, to bring new modalities, to make them more efficient, to make them more customizable. But at the end of the day, we need to get them to delivery, to get them to change our lives. This is going to take years. This is going to take years in the consumer space and in the enterprise space, and we are there to help our customers do it.
So as you said, you actually did progress in the US, or actually you entered the US in May. What's your progress there?
We've just signed a blue chip Nasdaq company last week, so that's great progress. They're moving into production, so that's great. We have a few other customers that have been, so it's probably like one of the many customers that we have. The science team has been growing there as well. We have 30 people working on multimodality in particular, so vision models. And the thing that we're opening now is Singapore. So we now have like different offices. We have one in London as well that has been growing.
Arthur, we're almost out of time, but I want to ask you, what's your AI utopia? Where do you see us in 5-10 years? Do you have a very clear idea in your head of what we'll be using, how, and when?
Yes, I think we're going to be talking to machines, and the way we interface with computers, the way we interface with knowledge, is going to be very different. It's not going to be computer and mouse. It's going to be you talking to a librarian that has access to the entire world knowledge. And so the future is great in that respect because you can learn faster. You can propagate services in places where you couldn't bring services, in healthcare, for instance. And so we have many things to build to get there, but the way we're going to be interacting with technology will be very different in 10 years.
Arthur Mensch, thank you so much for joining us on Bloomberg. That was the co-founder and chief executive officer of Mistral AI. With that, Kriti, I'm going to send it back to you in the studio.
Thank you.
For Francine Lockwood there having a very important tech AI conversation over in Davos. We thank you so much. It's fascinating that she keeps asking, and she said the same question to Andrea Orchel as well. Is the competition in the States at the end of the day? He's making the comment that actually maybe they should be looking eastward, not westward.
Yeah, I don't think we know the answer to these questions yet. I think everybody's trying to figure it out. I find it so. Here's what I think is really interesting over the last 24 hours. We started the show talking about the idea that there was all these tech kind of visionaries, you could argue, at the inauguration. It was really tech heavy. But was it tech's last generation that was at the inauguration? You could think of the obvious names. Is the new generation in Davos, is the new generation elsewhere? Like Sam Altman's in Davos, you've got Otto Mensch in Davos, you've got the people that are kind of making the next steps. Is that the last generation that we're looking at the inauguration? Is that the establishment of tech? Are they about to be disrupted by the people that we're talking to at the World Economic Forum?
Are you saying they're aging out of technology?
No, I'm just saying,
happens to us all, Chris.
The technology sector is relatively old. You think about it, this is a kind of post-2000s.
But they clearly think their interests align, don't they, with Trump right now? And we'll just see how long that persists.
Is that, but are they protecting their sort of dominance at the moment by being close to Trump? Is that what they're ultimately trying to achieve here by making sure that they're as close to this administration as they can possibly be, like standing right next to it as the Trump inauguration happens?
And the TikTok CEO was one of those. He clearly has a lot on the line, and we've heard from Trump that another executive order, giving another 90 days to try and find a buyer for the US part of TikTok. But will that be enough protection for those businesses that are doing business with TikTok in the States?
I guess they're friends again. We should remind everyone that the initial idea of a TikTok ban came from Donald Trump under his first administration. But it seems that he's now, especially after a visit from the CEO to Mar-a-Lago, now in the same boat. Take a listen to what he had to say about the future of TikTok.
Essentially with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. And if they don't approve it, it would be somewhat of a hostile act, I think. But it's good for China if it gets approved.
All right, so the new president of the United States talking about potentially selling it. He's already kicking it off by saying, I'm going to be a deal maker. And there's some real contenders, including in that row you were talking about. Amazon, a potential contender. Walmart, a potential contender. This affects the likes of Oracle, which holds the cloud around it. A lot of the folks in that $1.3 trillion row have a potential interest in TikTok.
Yeah. And we were talking just yesterday, Guy, about the role that this TikTok story plays in the wider China-US trade conversation, which has slightly blindsided me that it could take on such relevance. But clearly, from what Trump was saying yesterday, the president thinks that this is a card he has to play at his disposal.
The surprise is that China was barely mentioned yesterday. Like, TikTok got more reference than China did. This is the world's second biggest economy. You think about what has been happening in terms of the build-up to this presidency, this expectation that tariffs are going to be a big feature of the landscape between China and the United States. We didn't get it.
Would you argue it's one and the same, though? That what happens to TikTok is kind of sets a precedent for what happens to not just Chinese companies, but any companies that are abroad and considered a threat to the United States?
That's why it's in the crosshairs, isn't it? It's all about security and the way that the US views that. Yeah, I mean, no mention of China, no mention of Ukraine. Panama and Mars got more mentions. And thank you for John Authors for counting the mentions of all of those. Let's just take a quick look at some of the things that are coming up later today. We do have some data points in focus. We've had the UK data, of course, already. German's ADW survey. We will be hearing a little more from Rachel Reeves. That's really interesting, given the data we saw out the UK this morning, the wage data and the pressures fiscally.
She's in Davos tomorrow as well.
She is in Davos. She'll be speaking to us. We'll have Netflix earnings out a little bit later, and the Davos focus will be on what happens in Ukraine. Vladimir Zelensky and Schultz also going to be speaking at that event.
Francine Lacroix has already had a busy morning. She is going to continue with that busy morning. The Pulse is up next. JP Morgan's EMEA CEO is going to be joining. We've got Straight Street CEOs, Bank of France governor is going to be on deck as well. It's going to be a busy next hour. Plenty more coming up out of the World Economic Forum in Davos. It's day one there. Trump +1 as well. That's the real story. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Newsmakers and market movers. Live from Davos, Switzerland. For the World Economic Forum. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for the World Economic Forum annual meeting. Now, in a few minutes, we'll speak exclusively to the JP Morgan Chief Executive of EMEA and co-head of Global Banking, Filippo Gorri. Also this hour, we'll hear from the Novartis Chief Executive, Vas Narasimhan, the State Street Chief Executive, Ron Hanley, and the Banque de France Governor, François Villeroy de Galhau. Now, this week, we'll also bring you our exclusive interviews with some of the world's biggest power brokers, including the Argentinian President, Javier Milei, the NATO Secretary General, Mark Rutte, Larry Fink, Chairman and Chief Executive of BlackRock, and Ruth Porat, President and Chief Investment Officer at Alphabet and Google. In the meantime, what they're looking at is, of course, Trump tariffs. Will he not? In what time frame? That's definitely what the market is looking at. So if we look at cross-asset, not only dollar, because a lot of it will be playing out, of course, on the currency market, but also equity market, financial markets, probably got an early reminder of life under President Donald Trump as initial relief about the lack of immediate sweeping tariffs on all trade partners then turned into queasiness for some as he pledged to impose levies on Mexico and Canada within weeks. So we'll have a full market roundup and trying to figure out what chief executives here in Davos are looking at. Now, President Donald Trump says he plans to enact previously threatened tariffs of as much as 25% on Mexico and Canada as soon as next month. Now, he claims America's two immediate neighbors are allowing the flow of undocumented migrants and drugs into the country.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
So as President Trump begins his first 100 days in office, optimism is high among big banks, even though the U.S. stock market has come down from all-time highs and bond markets have definitely whipsawed. Well, here in Davos, chief executives and business leaders are digesting the impact of Trump's initial actions. I'm delighted to be joined exclusively by Filippo Gorri, JP Morgan Chase Bank's EMEA chief executive and co-head of global banking. Filippo, Thank you for joining us.
This
is our first interview, and we're not short of news, certainly with Donald Trump being inaugurated yesterday.
Yes.
What are you telling your clients on what a Trump America First policy does to investments in Europe and elsewhere?
Listen, it's a very interesting times to be watching the news and thinking about the future and so on and so forth. When you speak to European clients, it's interesting. You get, I would say, two sides of the same coin in terms of the way people feel. On one side, there is a degree of apprehension, trades, tariffs, and so on and so forth. But on the other side, you speak to European CEOs, there's also this excitement about the opportunity that this new administration might bring to the US economy in terms of growth, the regulation, pro-business, attitude, and so on and so forth. And many are actually asking, how can I take part in that incredible engine that is the US economy? So you have a little bit of both sides of the conversation happening at the same time.
So are you expecting flows actually from Europe to go to the US to take advantage of this economic, I guess, renaissance?
There is definitely a sense of people are looking at how can I structure myself in the best possible way to take part on that growth story, whether it's through M&A. Some companies are thinking about listing in the US. Some European companies are starting to thinking about listing in the US. Interestingly, I was in Asia last week. Some Asian companies as well are rethinking about listing in the US as well, which might not have been obvious a few months back. So there is definitely looking at the US as the beacon for economic growth.
So what does it mean for JP Morgan, where you're hiring less, and what you'll focus on in global banking?
From a global banking standpoint, the plan is what we set up last year, is the merger of the three lines of business: investment banking, corporate banking, commercial banking, to better serve our clients. We have began hiring plans last year. They will take on. They will continue back in 2025 for sure.
I mean, there's also everybody go back to the office from JP Morgan.
Yeah.
Have you had pushback?
So from a global banking standpoint, most of the employees were already 5 days in the office. And in general, as a firm, we believed that an in-office culture brings collaboration, opportunity to mentor, grow colleagues, explore more creativity, and so on and so forth. Definitely. Every time you bring a change, there are logistical issues that people have to go through, adjustments, and so on and so forth. But broadly speaking, this was signal that we were going in that direction.
What will be your biggest challenge in the next 12 months? I mean, you have a lot to do. They brought you over from Asia to basically run Europe and the Middle East.
From a personal standpoint, or
no, from more of a kind of
business standpoint, I would say definitely keep on finishing the integration of the global banking organization. Yeah. That's work that has been in the making. Literally, we're looking at things that have not been touched in 15 years or so. So there is a lot that has still to go through during the next 12 months. And then there is more that can be done in Europe. There is definitely excitement around some areas of the region, whether it's the Middle East, whether it's Africa, some products development of payments or asset and wealth management. So there is a lot that will keep me busy. Plus, I need to relocate the family back.
Yeah, which also is like a full-time job in itself. But your division has 90,000 people.
Yeah.
I mean, do you have to give more incentives for our bankers collaborating? Again, this is like actually a huge shift. Do you need to give more incentives in terms of, to find value in working together, or is it pretty smooth so far?
No, I think actually people have enjoyed the opportunity to work together, because if you take down even internal barriers and you make it easier to deliver it to clients, to deliver holistically the firm to clients, people actually have enjoyed that. So it's been a remarkable shift, and it's incredible seeing this global banking culture coming together.
Your thoughts on the UK? Again, there's rumors of banks maybe possibly abandoning the UK in certain parts. There's been a bit of a whipsaw. Is the UK still crucial to the bank strategy?
I believe so. London is our historical home. From a JP Morgan side of the family standpoint, JP Morgan's father, Junior's Spencer Morgan, actually launched JP Morgan back then in London before going back to the US. So there is no talk about abandoning London. London is still super exciting as a place, as an ecosystem of where to do financial business. And from an economic standpoint, I think this current government has a clear mind of things that they want to do. They have a narrow path because they have to deal with both debt and deficit, but they are very steadfast in that approach.
What are you most excited for in the next 12 months? I mean, again, it's a big job with the division and global banking.
Yeah, there is a degree of euphoria among clients, and I call it euphoria that honestly I hadn't seen in a long time. And so that's definitely exciting that what we can be part of in terms of a company building new corporates or developing new sectors and so on and so forth is definitely exciting.
But euphoria because of change, or they haven't seen that opportunity? I mean,
euphoria from a couple of things. On one side is as I mentioned earlier, the pro-business attitude of the new administration. On the other side, there is probably a backlog of activity. Think about monetization of us as the financial sponsor will probably need to do that hasn't taken place for the past couple of years. So there is the sense that things will happen. And I spent time 2 weeks ago with some of my colleagues in Dallas, Atlanta, and Miami, visiting clients over there. The euphoria is definitely palpable.
Does that mean more IPOs, more M&A?
So M&A for sure. I think IPOs as well will come back. There's a substantial backlog. If you think about the IPO class of 2024 at the beginning of December, so the data are from the beginning of December, 60% of the IPO class was trading above issue price. So they've done well. I think that will drag on into 2025, and that will propel more companies going public again.
And for M&A, are there specific sectors? I mean, a lot of it has already happened in terms of consolidation, but there are some industries that were a little bit left behind.
Well, if you look at, definitely, some of the usual suspect, whether it's healthcare, whether it's tech, whether it's consumer. In Europe, for the first time, the banking sector is becoming active, so we'll see what happens in that space.
You think, I mean, I know that you spend a lot of time thinking about European competitiveness. Yes. There's with the Draghi report, yes, where there's a lot of capital needed. Does there need to be a capital markets union?
Absolutely. As a European, absolutely. We need the capital markets union. We need bigger European banks, because banking, whether we like it or not, is a game of scale nowadays. Whether it's what you need to invest in technology and how much you need to invest in cyber and so on and so forth. And therefore, it would be great for Europe as a region, and as a European, I feel strongly about it, that creation of pan-regional European champions that can fight on equal footing with the American banks.
Okay, so you welcome competition.
Absolutely, they keep us on our feet, and it makes it fun. It makes it more fun coming to work.
There you go, Filippo. Thank you so much for joining us. Filippo Gori, there, EMEA Chief Executive and Co-Head of Global Banking at JP Morgan. Now, much more from Davos coming up. We'll speak to Novartis Chief Executive, and of course, we'll also have a good conversation on trade and tariffs. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Welcome back, everyone. Now, President Trump has wasted no time announcing steps to implement many of his campaign pledges, including on immigration, energy, and tariffs. Well, joining us now is our editor-in-chief of Bloomberg News, John Micklethwait. John, thank you so much for joining us. I mean, you spoke to Trump not a long time ago. He talked about tariffs.
Said I was wrong about everything all my life.
Yeah,
yes.
But then actually he really explained what he was trying to do. Should we really take him at face value when he says tariff is the most beautiful word in his vocabulary?
I think yes, because it's one of the things he's really believed in all his life. It goes a long way back. I think he was somebody who wasn't in favor of NAFTA. It was very difficult to find American business people who were in that position. I think that is something that's actually core to what he wants to do. And I think probably you're going to see more in terms of China and things like that as he keeps on going ahead.
But is this a negotiating tactic? What did you learn yesterday?
I think there's a bit. I think there are two Trumps. Number one is the ideological one, which actually he doesn't believe in that many things because his main belief is himself, so to speak. But tariffs is one of the things I think he really genuinely does believe in. He's always thought about that. It's about America first. It's about all those things. The other bit is his view of himself as a negotiator, as someone who can sit down there and do things, and that is doing things and having a negotiation, whether it's with Xi Jinping or whether it's with Tim Cook, as we discovered last time. He likes the idea of the great titans of industry coming in to see him and having to do deals to get exemptions and things. And the trade policy, you can do a bit of that. It's much harder on immigration.
How should chief executives look at the next 4 years? Is this going to be volatile?
It's going to be a mixture. You already see it. Business will gain something from a president who is more deregulatory, who on the whole doesn't like taxes much. That's what they're all rejoicing at the moment. You talked to Marcel this morning. Look at the bankers. The bankers are happy as hell because firstly they think Trump will get rid of rules. But even better, he might put pressure on the Europeans who are still imposing them not to do that because it'll look so uneven. So that's one side of it. On the other hand, I still think that if you look at global commerce, someone who is stopping free trade, stopping the way in which the world has worked, and I think that's bad for business. I would also make the point that actually it's bad for the poor of the world because you look at this era of globalization, which Trump has not liked. That's been an era where billions of people have come out of poverty, and that will be a real risk in what comes ahead.
But John, on geopolitics, we don't really know what his plan for Ukraine is, and we don't really know how aggressive he wants to be against China.
My guess is that on Ukraine, I think he wants to do a deal. That's sort of very obvious. It fits with all his aims. It fits with the idea both of America not being too exposed in places, and also back to that great deal doer. He wants to do that. He wants to make that work. And one of the questions there is whether Putin actually is as ready to do a deal as the Trump people suppose. Putin has sacrificed a huge number of lives to gain 2 provinces of Ukraine, which seems to be the sort of deal on the table. A third of his economy is devoted to
to arms production and things, he may want more than he's got already, and that's going to be a difficult bit. I think with China, that is where my personal bet is that becomes a bigger and bigger issue, because there's been a kind of ceasefire at the beginning. Trump asked Xi to his inauguration. You've had a lot of stuff involving Musk. But pretty much the one thing that unites not just the right in America, but the right and the left, is a deep, abiding fear of China, and Trump does not want to be seen as a loser.
I am really looking forward to a conversation with the Argentinian president. I mean, is he the unorthodox outsider that succeeded?
Milei's great. I mean, from the point of view that he's somebody who believes this stuff.
Yeah.
He's named his dogs after free market economists. Yeah. He's not hanging back in any dramatic way. And the interesting thing for Milei is, if you are a libertarian free market guy, how much overlap do you really have with Trump? That's quite that, because at the moment, they're brothers in arms. They think they're great, but actually the zones of their beliefs, the Venn diagram of what Milei believes and what Trump believes, the overlap is perhaps smaller than it first appears.
I can't wait for the conversation. I know it'll be explosive. John, thank you so much. John Micklethwaite, our editor-in-chief there of Bloomberg News. Now let's also look at the markets, because it's been quite volatile, Tom.
Yeah, and Fran, this is part of your conversation on the ground in Davos, of course, is how investors and how executives should be thinking about Trump policy as it comes through. And the readjustment is there, and you've seen that reflected, of course, in the US dollar. Today, European stocks taking account of what has come through in the last 24 hours. The European benchmark is currently flat. You are actually seeing some gains here in the UK. The FTSE 100 posting gains. S&P futures, US markets reopen, of course, after the holiday of yesterday. Currently pointed to gains on both the Nasdaq 100 futures and the S&P E-minis. Punting gains of 0.3%. US Treasuries are bid. Prices up, yield is down. On the benchmark 10, you're seeing a yield of 4.56 right now. Yields down 5 basis points. And by the way, across the curve, you are seeing money moving in to the sovereign debt of the US. We'll see to what extent that continues to be a theme, and that's diverged, of course, from the moves that we've seen in the Bloomberg Dollar Index, with the dollar gaining, of course, in the session today. But that currency has been whipsawed. Bitcoin currently at 102,000 after breaking through a record 108,000 yesterday, currently down 0.2%. Let's flip the board and have a look. Cross asset, you are seeing some pressures on the Mexican peso, on the loonie over in Canada as well, on dollar strength, and on the comments around 25% tariffs to Mexico and Canada, possibly as soon as February the 1st. Fran.
Tom, thank you so much. Now, European healthcare stocks face uncertainty this year as investors grow concerned about health policy in the U.S. Now, that's after Donald Trump nominated a prominent vaccine skeptic as health secretary, with the European sector slumping in the last few months of 2024. Well, joining us now is Vaz Narasimhan, the chief executive of Novartis. Thank you for joining us. I mean, you have a lot on your plate. So, of course, you're looking at the vaccines. You have to look at this. And then there's the Trump administration. There's talk about them cutting global funding, retrenching also their beliefs in how to use healthcare. How difficult does that make the international framework?
Yeah, I actually think the concerns might be a little bit overblown from the markets. I mean, I think when I look at the priorities of the incoming administration and the incoming health secretary, it's really around tackling non-communicable diseases. And for many companies like Novartis, that is a core priority of ours as well. Our medicines tackle these diseases. And I think there's also more openness than perhaps in the previous administration to having a pro-innovation agenda. If we can get some of the elements of public policy fixed, like the IRA and a few other elements, it could actually be a really big boon for the industry.
But your big concern could be on skeptics in terms of actually adopting. I mean, everything's shifting. So how does it impact pharmaceutical companies?
Well, I think there's the policy environment, and then there's the rhetoric. And I think we can actually get to a positive policy environment. But I do think we have to be really resolute in continuing to educate the American people, as well as people around the globe, that our data is incredibly robust. Vaccines are incredibly safe. Our medicines are well tested and really safe to use. And I think we can manage that. But clearly the rhetoric is something we're going to have to tackle.
It looks like they're building like a new part of the Congress centers. Usually we're interrupted by helicopters. This is a little bit different. I mean, do you see more M&A in the industry because of the new challenges?
I mean, I think certainly M&A could pick up, and I think it's actually less driven in our sector than the FTC, rather than a real maturation in the biotech industry in terms of some of the technology. We're seeing more exciting data. So let's see. Last year we did over 30 deals, right? And so we we were already quite active from an M&A and BD&L standpoint. So I think this will be a similar year, another opportunity to keep that going.
What's your biggest concern, though, for this year? Do you have to lobby? Will you go up in the U.S. more often?
I mean, our biggest priority and biggest concern is fixing the U.S. policy environment. You know, when the Biden administration put in the IRA certain rules that penalize certain classes of medicine, it was a chilling effect on innovation. I think if we can get some of those policies fixed, actually this year could be a really pivotal moment for our industry.
Yeah, but how do you do that? So again, you're a medical doctor. You know this stuff matters. Social media is also playing a role in this.
I mean, it's a complex environment for sure, and it's going to be tricky because on the one hand we have very surgical policy fixes, but on the other hand we're not in focus for this administration. I mean, I think this administration is about tax, is about immigration, is about tariffs, a whole other set of things that don't have a big impact on our sector. So I think it's more navigating the policy environment, hopefully getting to a better place, but also getting investors back on our side. If you look at it, I think the biopharmaceutical sector is way oversold. You know, when you look at 10-year lows, when we're on this renaissance of all of these new exciting medicines, and I think that's something we have to bridge now.
I mean, does the U.S. vaccine policy actually reverberate across borders? Are you expecting other countries to potentially look at the same?
I hope not. And I actually think in the U.S., in the end, the vast majority of people trust vaccines. And they know that vaccines are one of the most important public health interventions that's ever been created by humanity. The data is incredibly robust. My background is a vaccinologist, as you know. I've studied and worked on vaccines for most of my career. They're the most important public health intervention that we have. And I think, you know, most public health institutions will hold the ground. And I think that's incredibly important.
You said Novartis is also working on some next generation weight loss drugs. How far along are you on that?
So for us, weight loss drugs is not in priority. I mean, I think we really work on the next wave that could be in the 2030s. For us right now, it's launching our breast cancer medicines, our prostate cancer medicines, our new medicines for immunology and cardiovascular disease. And that will enable us to grow actually mid-single digit or better for the remainder of this decade with very attractive margins. You know, we've completed this $130 billion transformation that you and I have talked about in the past as a pure play. And so right now, the business is firing on all cylinders. So we're thinking we're going to have a great couple of years ahead of us.
Vaz, what's the big conversation being had here? I'm sure you get stopped, and what do they ask you?
Yeah, I think there's a lot of excitement about the changes in the Trump administration and how that could be a big boon for business. AI is, of course, in focus, and also AI in healthcare. And so I think that will continue to be a big topic. And I think probably how to now manage other global environment, ESG, how to actually strike the balance given the current administration in the United States.
Okay, thank you so much for joining us. That was, of course, Vaz Narasimhan, the chief executive of Novartis, with a good look at what needs to be done and some of the concerns, of course, around healthcare and vaccines at the moment. Now, coming up, investors on tenterhooks for the impact of President Donald Trump's tariff plans on the global economy. We'll speak exclusively with State Street chief executive Ron O'Hanley. That's next, and this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning, everyone, and welcome to our special coverage live from Davos for the World Economic Forum annual meeting. I'm Francine Lacroix. Now, economists and traders are expecting the ECB to cut interest rates next week, with 2 or 3 more possibly to follow this year. But geopolitical risks, including Donald Trump's economic policies, pose a threat to the central bank's inflation targets. Well, joining us now to discuss all this is François Villeroy de Galhau, the governor of the Banque de France. Mr. de Galhau, thank you so much for joining us. I mean, there's a lot going on right now in the world, in the economy. Good morning. The markets are convinced that there's going to be a cut in January. Are they right?
First, we have been successful so far in disinflation, and victory against inflation is on track in the euro area. Remember, we were at more than 10% 2 years ago. We are now at 2.4 in December, and we expect an average of 2.1 this year, so very close to our target. For next week, we will see, but there is a plausible consensus that we will go on acting at each meeting, which we have successfully practiced since September. And we said from the start a meeting-by-meeting approach, which is not a quarter-by-quarter approach, let me stress it. So, and if we are decisive enough about this pace of the cuts, we probably don't need now to increase the magnitude of the cuts, which could be another debate. I wouldn't exclude this possibility for the future, but this is what I call agile pragmatism. We should be ready to act. If we go on this pace, we could be by 10% by summer. But around 2%, which is a neutral rate.
Okay, so before you get to the 2%, I mean, what would need to happen for you to pause? So first of all, pause next week. If it's not, I mean, it's almost a done deal, but what would need to happen from now until, the next meeting? And in general, what would need to happen, maybe from the Trump policies, for you to pause?
First, we will look at inflation, including core inflation. If I look at our side of the Atlantic, I'm not very worried. I am vigilant, but not worried about inflation, including the effect of Mr. Trump's policies.
Which are not modeled. Are they modeled yet?
No, we don't know yet exactly, but there are obviously less tensions on the labor market and on the goods market in Europe. And we will see the degree of possible retaliation, but I would say that the perspective about inflation is quite assured. On core inflation, we are still at 2.7%. We expect it to fall back to 2.3 this year. And if you look at goods, manufactured goods, inflation is very low in the euro area. It's a bit more sticky on services, but it's logical, and we expect it to fall. This is already what we see in France, for example, where core inflation is around 2% already.
Could you go faster, actually, to get to that 2% neutral rate?
Depending on the news and on the flow of incoming data. I am a pragmatist, and this is what I call agile pragmatism, being ready to adjust, and we are not on a preset curve. But let us suppose we are around the 2%, so the neutral rate by summer, then we would have to assess if we stay there or if we go further. But I would say that till then, we will look at data, but probably our curve is the simplest among major central banks. If I may stress it, we were the earliest to cut rates last June. We are the lowest at 3%. We're much below the Fed or the Bank of England, which are above 4%. And we have probably the simplest task for the months to come, but it remains data dependent, pragmatism.
But so, Governor, for the moment, you can't rule out going below the neutral rate. That's fair, right? You could go below 2%, below the neutral rate?
This is not a question for now. We are at 3%, and as I said, probably there is a plausible consensus to act at each meeting.
And the data so far supports your view 100%, that actually you will do gradual.
Yes, on inflation, we are on course. The news are even a bit better than what we expected. So we'll see. Long-term rates are a different story. Because for short-term rates and monetary policy, decoupling is not an issue. We are independent on each side of the Atlantic. For long-term rates, there are spillover effects. There is some kind of co-movements. Although the levels are very different. Yeah. If you look at the 10 years for German bonds, they are 2.5. And if you look at US 10 years, they are above 4.5%. But here, there is a rise, a core rise, so to say, a partial core rise due to inflation fears about fiscal policy and global uncertainty. Right. And this is what you see in term premia. There is a lesson here. We shouldn't let the benefits of monetary easing and disinflation be wasted by too lax fiscal policy or economic fragmentation. Or to put it in other words, an economic policy, in order to be efficient, must be consistent.
How do you see the moves in euro?
We see the move on growth probably slightly positive. We expect around 1% this year. And we will have an increase of real income due to the success of disinflation. So it could be a gradual recovery till next year. But this is not enough. So we need to push on structural reform. This is the Draghi and Letta agenda. And if Mr. Trump's program has a virtue for Europe, it should act as a wake-up call. Clearly, it's time to accelerate on structural reforms for growth and innovation.
Do you worry about growth in Germany and growth in the Eurozone because of Trump policies that the first time around were really against Germany?
I don't think there are huge differences among European countries. Obviously, the southern economies are now more dynamic, but remember some years ago it was exactly the opposite. No, we have a common challenge. And we must take probably the best lessons of the US economy, let us be honest. This is what I could call the three I's. We should integrate more the single market. We should invest more and better, thanks to private savings. This is a famous savings and investment union, but it's time to implement it and not only to speak about it. And the third I is to innovate more and quicker, and this is about diminishing bureaucracy. Yeah. None of these three I's has fiscal cost, by the way. So let us be decisive and take this opportunity really to wake up.
Governor, when you look at the climate change policies in the U.S., and we're expecting them really to be retrenched, what does it mean for your work at the central bank for mitigation?
Obviously, we regret Mr. Trump's announcement to leave the Paris Agreement. This was not a surprise, and this is what he did during his first term. But remember the positive reaction we had in 2017. We created in Paris the so-called NGFS, Network for Greening the Financial System. It's based in Paris. It's a coalition of the willing, a very enthusiastic one. We were 8 members at the start. We are now about 140 members. And this coalition of the willing, believe me, is more committed and active than ever. We published just last year a long-term climate scenario. We will publish this year the first ever short-term scenarios, and we have been tasked by the G20 presidency to work on so-called transition plans, how to reduce for financial institutions and for corporates the CO2 emissions.
Governor,
so it's a coalition approach, but it can be very efficient.
You've been very clear that actually the ECB probably has the most comfortable or easiest job right now.
I said simplest.
Simplest job, but of course we've seen a lot of market moves. In certain cases, we worry about market dislocation because of the Fed and what they need to do on market adjustments. Is that a problem for the ECB?
No, as I said, monetary policies are independent on both sides of the Atlantic, and we started earlier and it was not an issue. So each monetary policy is targeted to domestic inflation, and this is the way it should proceed. Long-term interest rates are a different story.
But you could see big bond moves, right? As, I guess, bond vigilantes go around, a bit like what they did in the UK 2 weeks ago.
I think the euro area is so large that it is much more stable, and this is a huge advantage of the euro, by the way. And in the euro area, fiscal policy is probably less lax, inflation is lower, short-term interest rates are lower, so there are good reasons to have this differential in long-term interest rates, about 2%, which I mentioned earlier. But again, we must run consistent economic policies, especially between monetary, fiscal, and trade policies.
Crystal clear. Mr. De Gallo, thank you so much for joining us. That was François Villeroy de Gallo, the governor of the Banque de France. Now, coming up, we'll speak exclusively with State Street Chief Executive Ron O'Hanley. That's next, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back, everyone. Now, traders betting that Donald Trump's tariff plans may spur inflation and prevent future rate cuts from the Fed. Now, the lack of an overall narrative on trade restrictions so far is underscoring the risk of higher volatility across financial markets. Now, joining us to discuss all of this and the outlook for the U.S. economy, an exclusive interview with Ron O'Hanley, the chairman and chief executive of State Street, one of the world's biggest custodian banks with over $3.5 trillion of assets under management. So, Ron, thank you so much for joining us. There's a lot to get through, trying to understand actually volatility, the Fed, the interest rate cuts. How do you see the next 12 months?
Well, I think the best way to describe it is uncertainty. Everything that the president has announced before he came in suggests that there'll be quite a few policy changes. You just referred to tariffs, restrictions on immigration, really thinking more and probably accelerating deglobalization that we've seen so far, and all of these things have inflationary pressures. On the other hand, there's deregulation that seems to be out there too. So it's, I think it's just very uncertain at this point. But I think it's fair to say that it puts the Fed in a very difficult spot now because they have to be thinking forward.
So how's this trade-off, actually, again, between growth and deregulation, but inflation going to play out for the Fed?
Well, what I think the Fed is looking at is still, which we have to remind ourselves, a very strong economy. And almost every element of the economy seems strong, but there have been signs, certainly, of moderating. Prices have moderated, economic activity has moderated a little bit, but not that much. And what they're going to watch out for now is, one, will all this activity and all this, if you will, confidence spur more economic activity and at least cause or have them consider a potential pause. Some of the things that we're talking about here in terms of the impact of tariffs, that won't become apparent right away. But it could become apparent over the medium term.
How many cuts are you expecting this year from the Fed, if any? Because, you know, a lot of people are changing their outlook, and higher for longer is the new game in town.
Yeah, so you and I talked last year, and I was very, very skeptical that there would be as many. I would not expect any more than 2 this year would be my own prediction.
And what does that mean for asset managers? A lot of volatility, I guess, in markets, and that's opportunities.
Yeah, there's volatility. I mean, ultimately, asset managers need strong underlying economic growth. So in the short term, there'll be some concerns, and particularly around bonds, because there has been, as you know, this sense that rates are going to come down. That's favorable for bonds. So bond investors will be very wary. Again, over the medium term, there'll be some concern about U.S. debt, and between this trade-off of lower taxes and what will happen with spending. Will enough spending be cut to cover lower taxes? So there will also be some concern about debt. So everybody's going to be watching the Treasury market.
Yeah, and the Treasury market can infect other parts of the world, like we saw in the last 2 to 3 weeks, that you don't really know where that risk ends up.
It does, and it also it affects confidence. And if you think about the last few crises, oftentimes they're preceded by some kind of a backup in the Treasury market. So certainly professional investors will be watching that.
Ron, do you worry about some of the Trump policies actually being inflationary, or do you think that the markets will keep that in check because we think or we understand that the president actually watches markets in real time?
So he does watch markets, and that's his reputation. On their surface, things like tariffs should be inflationary. But to the extent to which they actually get implemented and to what extent they get implemented, and are they really about a permanent tariff imposition, or are they really about some broader kind of transaction or deal that the president would like to make? And that's what we don't know.
In terms of some of the things that we're expecting for deregulation, does it mean that State Street will go into other asset classes or do more offerings? I think we're focused a lot on ETFs.
Yeah, I mean, we like our business model because we really do 2 things. Our largest business is custody and investment services, so we're supporting the activities of other investment managers. And then the second is investment management. And in our investment management business, we're very strong in ETFs. There's been a lot of innovation in ETFs, and as you think about it, over the last 5 years, the ETF has become really the structure of choice around the world. It started out as a U.S. phenomenon, but our biggest growth area now is in Europe. as ETFs are replacing other kinds of funds. So from that perspective, we like our business model. On the regulation side, I think the prospect of deregulation, particularly if it's smart deregulation, will be helpful to lots of businesses. And in financial services, I think the hope amongst the bankers, all of us, would be that at very least that there's not more regulation put on, and then we'll go from there.
Ron, what about crypto? So I know the SEC also approved a Bitcoin ETF. Is that something that you'd be interested in looking? We're trying to figure out really when the Trump administration says we're going to put crypto at the forefront, what that looks like.
So we think of it much more broadly. We think of it as digital assets, with crypto being a subset of that. And we see digital assets very much as part of the future here. It's actually could and should be beneficial to markets to the extent to which it actually accelerates settlement periods. So digital assets and a framework, a regulatory framework for that would be very helpful. With crypto, the key issue for banks has been, are they able to custody it? Up till now, they haven't been able to, given the way the accounting rules have been applied. But to the extent to which that changes, I mean, that's then something we'd be interested in custody.
I mean, BlackRock, with the global infrastructure partners, also really had a huge foray in infrastructure.
Yeah.
Is this the new hot asset class?
Well, I think alternatives in general and the blurring of the lines between private and public. And I think BlackRock's just a great example of that, where they will come to their investors and have a combination of public and private and not make these distinctions. So, and I think you'll see that now, you'll start to see that in some fund structures too.
So what does that mean concretely for State Street?
So for us, the way we think about it is how do you democratize these things and bring them to a broader set of investors, whether you're using the ETF or the mutual fund as that kind of structure. And we think there's lots of opportunity there.
Ron, there's so many questions, and I know participants come up to you and say, like, what do you think about this and this and this? What's the question you've been getting the most this week?
Well, what does President Trump mean? Yeah. Right, that is the single question. And it depends on who's asking it. I know there's quite a bit of concern in Europe about this. Some of it is financial, some of it is much more geopolitical, and what does it mean for alliances? What does it mean for NATO? But I think it's also starting Europeans to start thinking about, what does it mean for them as they think about their own regulatory structure? And that could be a good thing. If there's just a broad look at regulation in toto around the world and saying, there's certainly need for regulation in certain areas, but at some point do you ask, have you gone too far? And in some ways, I think those questions being spurred by the president is actually a good thing.
Ron, so interesting. Thank you so much for joining us. Ron O'Hanley there, State Street Chairman and Chief Executive. Now, much more to come here from Davos as leaders gathered here to digest Donald Trump's first day of policy action. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner. We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need people, and I'm absolutely fine with it. We want to have it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. But, you know, we'll see. We think we have very good grounds.
Some of President Trump's executive orders he signed following his inauguration. Now, President Trump has ordered the U.S. out of the Paris Climate Agreement for the second time. The withdrawal will take a year to go into effect, but signals that Trump's commitments to rapidly overhauling U.S. energy and climate policy, while the specter of the world's second biggest polluter leaving the accord, again has already shaken global climate diplomacy. And veteran Republican Senator Marco Rubio has been confirmed as Donald Trump's Secretary of State, the first of the U.S. president's second-term nominees to be approved. Rubio, who served 14 years on the Senate Foreign Relations Committee, is one of Trump's more conventional cabinet choices. He was cleared by a vote of 99-0 in the Senate, in a sign of broad support he has amongst former colleagues. And here in Davos, the UK Chancellor, Rachel Reeves, will meet with the executives of JP Morgan and Goldman Sachs, Jamie Dimon and David Solomon. Now, Reeves is hoping to persuade company bosses to invest in the UK amid flatlining GDP and persistent inflation. In fact, we'll be hearing from more business leaders from Davos, including Ruth Porat, president of Alphabet and Google, and Sajjad Moti, chief executive of UBS. And then our John Micklethwaite also speaks to Rachel Reeves tomorrow. Now, plenty more to come on The Pulse. This week from Davos, we'll be speaking to the Google DeepMind Chief Operating Officer, Lila Ibrahim, and the Governor of the Bank of Spain, Jose Luis Escriva, amongst others. Up next, more Davos, Day 2. We look at addresses also from world leaders. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Back with a broad list of executive orders, Trump floats Mexico and Canada tariffs within weeks. A reprieve for TikTok. The social media app gets more time to reach a deal as the president halts a U.S. ban. And the World Economic Forum kicks off with leaders gathering in Davos. Good morning, Menace.
Danny, good morning. And it's the first day for the cash trading. Futures are open at the moment, up 0.5%. No universal tariffs, and these equity markets take their relief. Yes, there's a threat of 25% on Canada and Mexico. But benign Trump policies, Bank of America survey says, could spark a rally in some of the stock laggards. The U.S. overweight goes from record 36% in December to 19%. Roll it down, have a look at the bond market. 6 sessions, including today. We're down 25 basis points over the past 6 trading sessions. The max universal tariffs has been avoided for now, and so that emboldens the narrative that the Fed may still be in play. The 5-year forward, we'll talk more about that in a moment, is not breaking to new highs. But ground zero for reaction is in the Canadian dollar and the Mexican peso. Gradualism was the word yesterday morning. By the close of business last night, there was a risk of max tariffs on Canada and on Mexico. And so the Canada makes the lowest level in nearly 4 years, since 2016, I should say.
Yeah, some of the relief yesterday starting to wear out. We're also keeping our eye on some individual stocks this morning. Apple is falling this morning. It got both a downgrade from Jefferies, and its China iPhone sales plunged during the holiday period.
MicroStrategy and other crypto stocks are falling after President Trump omitted the sector from his executive orders on day one.
And finally, Intel is continuing to surge. There was a report end of last week, that the company might be an acquisition target. Those shares up 5% in the pre-market hour.
Coming up this hour, Davos exclusive with the CEO of Saudi Aramco, and we speak to Jeffrey Yu of BNY Mellon. But first, President Trump gets straight to work on his return to the White House.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. NATO has to pay more money. NATO has to pay 5%. World Health ripped us off. Everybody rips off the United States. And that's it. It's not going to happen anymore.
Back with a bang and an exhaustive list of executive orders. Joining us now, the host of Bloomberg Big Take podcast. It is David Gura. David, good morning. Long day for you yesterday. Long day for everybody. I mean, a golden age, very different tone to what we heard from the president in 2017. But we went from gradual tariffs yesterday morning to the threat of maximum tariffs by the close of business on Mexico and Canada.
Just the threat, though, and I think it was interesting you say it was an exhausting day. I mean, the day evolved dramatically from the kind of formal inaugural address that he gave in the Capitol Rotunda to a more freewheeling speech that he gave to those who couldn't fit in that room afterward, to what he said at the Capital One Arena, the basketball and hockey arena in Washington, D.C., and then in the Oval Office, where he clearly was very comfortable kind of riffing on that stack of papers and executive actions that he had on his desk. So, no, we didn't get the maximalist tariffs that you were talking about on China, but in response to a question about Mexico and Canada, he said maybe by February 1st, those 25% tariffs will be put in place. So it's, I think, the Trump that we know from the last time he was in office, that being nobody dares forecast or telegraph what he might or might not say. When he says it, people react and markets move as well, and we saw that yesterday with the tariffs.
In all fairness, in Trump 1.0, it was about a year plus before we got any sort of broad tariff policy put into place. Does it signify, though, a Trump that's sensitive to markets or a Trump team that's just divided and hasn't reached his decision yet on tariffs?
I think it's a little both, and yesterday I talked to one guest on radio who said maybe he's reluctant to put these tariffs in place yet because his U.S. trade representative hasn't been confirmed yet. So maybe it's just a bit more shrewdness about who's in place and what that person thinks about these broader policies that are going to go into effect. But of course, the markets are incredibly important to him. We know that very well. So I think there is this awareness of the fact that he sees reaction in U.S. and global markets and is reluctant, I think, to do anything that will upset the apple cart too much.
Listen, he declared 2 national emergencies, and he really did lean into, as he called it, make America safe again. So what is in play when it comes to the border? Because that's where he went to pretty much first off the bat.
And this is what he promised he would do on the campaign trail and through transition as well, that immigration was an incredibly important issue for him going forward here. So this first national emergency that he's declared on the U.S.-Mexico border is going to make it so that the return to Mexico policy is in effect once again, that if you apply for asylum, you have to stay in Mexico. You can't do it here in the United States. And we saw images of those who had appointments with Customs and Border Patrol scheduled to take place yesterday, now seeing those appointments canceled. So he's beginning to do that. He's saying he's going to work with states. He's going to get the National Guard involved here in patrolling the southern border especially. Again, clearly an issue he's talked a lot about and cares an awful lot about. The other national emergency has to do with energy policy. And again, this is something he's talked about quite a bit as well. He sees the need here for more exploration and production when it comes to natural gas and oil here in the country, despite where the price is and where it might be headed. He's making good on that. And I think it's worth stepping back here. Yes, there were dozens of these executive orders. Some of these have teeth. Others are just kind of directional, directing agencies and those working for his administration to pursue more policies than other and kind of walking back policies that might have been put in place by his predecessor.
One of the other tensions in the administration that I think we've started to watch unfold is between traditional MAGA, anti-immigration, real industry versus the kind of tech. The brotocracy, as one economist, David McWilliams, put it. If you just judge by the podium behind him, it was the tech titans that won out. Basically went them and then the cabinet behind him. Is there any significance in the direction, the remake of MAGA and more of a Trump image going forward, just even based on who was invited to the inauguration?
I think it's worth us just pausing and looking at those images once again because it was really extraordinary. Of course, the inauguration was moved indoors, and so that made the crowd size much smaller than it was in the past, and we know he cares about that. But you had these big executives, I think their aggregate wealth in that room, $1.3 trillion, many of whom were sitting in front of cabinet appointees and nominees that the president had put in place. So just an extraordinary statement in that regard to just see them there, see the level of influence they have. And I think you can kind of step back and say, oh, is this going to continue? Is this kind of a nice pastiche that the president has in this ceremony, or is it something more? But we see the level of engagement that they have had and are likely to continue having here. And you're right, this is a huge disconnect here. You hear from the likes of Elon Musk the importance of these H-1B visas. technologies and how important that is sort of for innovation and the sort of health of the tech sector in this country. I think that debate is going to be roiling and will continue here into this term.
It's interesting. Bernard Arnault was in that audience.
The whole family
as
was
well.
there, I think. Yes, yeah, the whole Arnault family got tickets.
Bring the luxury as well as the tech, as well as the tech crowd. There's three interesting areas: withdrawal from the Paris Agreement, the WHO, and the OECD. This speaks a lot about isolationist USA relative to the rest of the world, doesn't it?
I mentioned a moment ago kind of a number of these going back on policies the Biden administration had put in place. And of course, we watched as Janet Yellen, the now former Treasury Secretary, worked so doggedly on that OECD tax bill. For instance, in trying to get 140 countries involved in that, these 15% corporate taxes across the board. President Trump walking that back with just the flurry of a pen yesterday. And so I think that, yes, it's this reaction to multilateral policies that were put in place by this past administration. Again, sending a signal here that that's not the direction this country is going to go in going forward.
Yep, and it's only day one.
Only day one.
Only day one.
Day two. Here we are.
Well, yeah, now it's day two. We'll see what today brings.
Yeah.
David Gura, thank you so much for that. Okay, let's get to some other top stories now that are trending on your terminal. ECB Governing Council member Peter Casimir is predicting a rate cut next week, and potentially 2 or 3 more. He added that geopolitics pose additional risk to inflation and heightened price pressures that are likely to accompany President Trump's economic policies, as well as disinflationary forces originating in China.
President Trump is being sued by immigration advocates over his bid to end automatic citizenship for children born in the U.S. whose parents are unlawfully or temporarily in the country. The change is set to take effect in 30 days and would upend more than a century of U.S. policy and court interpretations of the U.S. Constitution.
Strong winds from the Santa Ana winds are putting Southern California back on high alert after 2 weeks of devastating fires. The National Weather Service says the gusts could be as strong as 80 miles per hour along the coast and valleys, while mountains and foothills could see 100-mile-per-hour winds through today.
Coming up on the show, U.S. exceptionalism may face a different reality in 2025. That's according to Jeff Yu at BNY. We'll join him next.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact
I think February 1st.
And just like that, and any comfort this market had that President Trump didn't sign an executive order specifically on tariffs was upended with those comments. The dollar started to strengthen after posting its steepest drop in a year. The Mexican peso weakening this morning by more than 1%. As it comes to risk assets, though, S&P 500 futures, those are holding on to their gains, as is this Treasury market. Joining us now is Jeffrey Yu, Senior Strategist at BNY. Jeff, FX, risk, and Treasuries having very different reactions to a President Trump that perhaps looked like a win for more bark than bite. Did yesterday change anything for you?
So not at this point. I think tariffs are always going to be at the top of the agenda for foreign exchange markets. If you look at Canada and Mexico, maybe some of the surprises were that these two were at the forefront, but then again, that's been talked about as well. But then by extension, markets are thinking, well, are general tariffs off the table? What's going to happen to Europe? What's going to happen to China? So the bottom line is everything is on the table. And if we think about FX, if there are tariffs, then the reaction will be potentially rate cuts, lower exchange rates as an offset. So it's kind of par for the course right now, but will there be differentiation? Will there be general tariffs? I think now that's the next step for markets to consider.
Well, Jeff, yesterday was a start of the day, relief, no universal tariffs, and the bond market really took it to heart. We've rallied for 6 days in a row. Last week, you had Waller and the CPI. I look at the five-year forward, and that is not exploding higher. That sends me a clearer signal of what the market is trying to bank on for the moment. But is it naive?
I don't think it's naive if you look at the mix of policies, if done right. If you think about deregulation, increased energy production, things like that, you can make a case for it being disinflationary. Of course, people will take a different view in terms of tariffs, but it's about getting the mix right. I think given how markets are performing right now, it's about what is materializing, over the last 12, 24 hours versus expectations. And now, at least for the time being, there's just no need to revise inflation expectations. But then let's take a step back. For the US economy, the supply issues, the labor market issues, if that data doesn't come down, then bear steepening in particular, we still think that's a risk as far as the Treasury market's concerned.
Jeff, it does feel, though, that markets are in the strange no man's land at the moment where they believe that Trump isn't going to do anything disruptive to markets, but at some point, presumably, he has to come out either with a threat or actual action of putting big tariffs on, or else the bluster, the negotiating tactic, loses its ability to be a negotiating tactic. Do you think markets are overlooking some big action that President Trump might actually take? Are we prepared for that, what seems to be an eventuality?
So if I look at FX markets, for example, in the options market, clearly people are putting on insurance. I mean, even before yesterday's comments, within the options markets, if you looked at dollar Canada, people really were buying insurance. You look at where euro-dollar implied volatility, options that was a sign that people were worried as well. So it's not about absolute levels sometimes, and I think for the time being, there's no need to massively reduce US holdings or add to US holdings, US exceptionalism. That clearly is in play. But after the gains last year, I think people can afford to just add as much insurance as possible. And if I look at that, I guess people are hoping for the best, preparing for the worst, and that seems to be the sensible approach for the time being.
Okay, well, we wipe our brows, certainly that the China 60% tariffs aren't there at the moment. Your positioning, your U.S. exceptional positioning has been in place. It's the strongest in 3 years. As you start 2025, there are many unknowns. But do you think that exceptionalism and the scale of that exceptionalism endures over the rest of the world, Jeff? Because Bank of America are saying something very different this morning.
So I think you hit the nail on the head there by saying the scale of exceptionalism. So if we think about it this way, US exceptionalism in terms of outperformance, so it still may deliver strong returns in terms of the dollar, in terms of equity markets, but are people starting to look at their dollar valuations, looking at US equity valuations, saying maybe on a relative basis, there's a case for Europe right now. If China gets reflation right, if China gets domestic stimulus right after Lunar New Year, heading into the March MPC, then is there a case to actually increase allocation allocations, back to these regions, which, to be frank, have been unloved for a very, very long time. So it's not really about pulling the US down per se, but are there gaps to be filled elsewhere? So that's one aspect that we're looking at. But also the case, is it Goldilocks right now? How much more perfection can you get out of the US? That's one thing to consider too. So I think more rotation at this point, and that may inhibit US exceptionalism in absolute terms, but we need to be cognizant of the total risk exposure as well.
Even just within the US, Jeff, part of the narrative had been that there would be a broadening trade. You've seen some of that in the past few days, but if we just take the imagery from the inauguration, for all Trump likes to talk about manufacturing, it wasn't the CEOs of GE and Caterpillar sat behind him. It was X, it was TikTok, it was Amazon, it was Meta. Does that to you suggest the growth industries, what this administration will be targeting and allowing to have robust growth, and therefore maybe may continue to be the trade of 2025?
So those industries, as far as our allocation is concerned, if we look at where our international investors are positioned, that still is firm, especially on a relative basis as well. But is the US just the mega caps? Is the US just tech? So I think those are the questions that asset allocators will really be looking at, and also around the world. Is there a case for some catch up as well, greater competition, for example? That's a point about US. I think intra-US rotation, that would be much more interesting. And those hallowed words, trickle down. How much can it trickle down into the underlying household, into consumer? Will affordability, real earnings come up? Will there be a case for the consumer sector as well? I think those are some of the areas which are overlooked. So absolutely, within US rotation, that could be one of the themes as well. Can mega cap exceptionalism, can that be maintained, is going to be an interesting play.
Well, they're certainly going to like the 25 basis point drop in the bond yield. Jeff, thank you very much. Jeff Yu from BNY on exceptionalism. Coming up on the show with Danny and I, 75 days for TikTok. More on what's in store for the app. That's next on Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
You're spoken, sorry.
My voice and my conversation, my poetry,
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent
Which
the
is a
Bitcoin
lot, by the
on
way.
beer and groceries and gas and video games.
And
I wish I had
hogs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
that
probably wouldn't
Bitcoin.
be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
Front pages from around the world. This is what we've got for you. First up, Washington Post. Ohio State beat Notre Dame. Notre Dame. Notre Dame? We got
Notre
it.
Dame. Good
She
work,
knew
Anna.
she was saying.
You're too cultured,
football,
yeah.
me, yeah, Notre Dame. To win the national championship. The number 8 seeded Buckeyes won with a 34-23 victory. This is also the team's first title since 2014. It's a sort of an in-house joke.
I just want to say thank you to the production team who gave Manis the football read to do it.
American football at that.
Okay, let me save you, Manis. This is what the New York Times has. The New York Times leading with former President Biden granting a wave of preemptive pardons in his last hour of his presidency. This was talked about a lot before the inauguration. He granted blanket pardons to 5 family members. Biden said that the pardons for his family should not be taken as admissions or acknowledgement of any crime.
And on Bloomberg, President Trump temporarily halted a ban on TikTok in the U.S., granting the app more time to find a buyer. He signed the executive order granting a 75-day reprieve from the U.S. prohibition that took effect on Sunday.
Ooh, look at that. It says TikTok. My, what is that all about? Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner.
Joining us for more on this is Tamlin Basin of Bloomberg Intelligence. Tamlin, a lot was made of this over the weekend, pulling up TikTok saying we've been banned, but President Trump will bring us back. And then relief, President Trump has brought us back. Where do we actually stand on the viability of TikTok to continue in the U.S.?
Yeah, so if you look at the executive order, what it did is it granted 75 days of non-enforcement. So what President Trump is doing is directing his Justice Department and his Attorney General not to enforce the prohibitions of that ban. And specifically what it is it's telling the distribution partners of TikTok and the hosting partners of TikTok is that we're not going to go after you for liability. And that could be very huge because the potential liability is massive. We're talking about in the hundreds of billions of dollars. I think it sort of remains to be seen whether those hosting partners feel confident enough in this executive order to again start working with TikTok.
But then it comes down to what happens in this intervening 75 days. China signals they won't block a deal on TikTok, so it's the potential for a JV or an outright sale. How's that going to line up?
Yeah, so again, what you have to do is you have to look at the bill that passed Congress. There, what Congress was looking for was a total divestiture of TikTok. There has to be a qualified sale of TikTok per the letter of the law. So I think we're really going to have to see how these discussions take place and whether any sort of joint venture is going to work within the confines of that law.
And Tamlin, can you just kind of round things out? We're looking at Apple shares this morning of iPhone sales in China falling in the holiday quarter. Just where we stand with this?
Yeah, so I think what we are looking at is Apple is still struggling to get its AI features on those Chinese iPhones. And I think what these reports suggest is that customers aren't quite willing to upgrade that refresh cycle until those features are on the phone. I think that's the way we would look at it at this point.
Okay, Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence. Yeah, down 18% in the holiday quarter. But it's day one officially of these markets, going to open up today on day one of the official cash markets for the Trump presidency. Let's have a look at these markets. I mean, the Trump sort of technically lives, doesn't it?
Yeah, it does. It's a market that's decided there's more bark than bite. We got the bark of threatening 25% tariffs on Canada and Mexico, but no actual action. Risk assets still bid this morning, Manis.
And I think, those big, long duration Mag 7, they're going to take heart. You're down 6 sessions, 25 basis points on the long end of the curve. Coming up in the show, it is Trump's day one package of executive orders in context on Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And, in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger, Manish Cranny here. Let's set your agenda.
Back with a broad list of executive orders. Trump floats Mexico and Canada tariffs within weeks. A reprieve for TikTok. The social media app gets more time to reach a deal as the president halts a U.S. ban. And the World Economic Forum kicks off with leaders gathering in Davos. Danny, good morning.
Good morning, and it is risk assets still rallying despite Trump floating the idea of 20% tariffs on Mexico and Canada, but nothing specific. Therefore, you get NASDAQ up 0.6%. The Russell outperforms, up nearly 0.9%. Same thing goes for this bond market. Bonds can continue to rally. We are down by 6 basis points this morning for your 10-year yield, just under 4.6%. Where you have seen volatility instead is in currency markets. Euro weakening by 0.6%. Dollar versus the Mexican peso stronger by 1.33%. And Manis, I just think it's worth taking a pause here. Ian Lingen of BMO put it really well. He said that he thought that yesterday would basically be an event risk. And once it passes, we will be able to rally. And that's basically what we got. It passed, no big fireworks despite that verbal threat. And you have this rally that's able to continue.
And the risk was this, that if you had maximum universal tariffs across all of the promises, you were going to add 0.5% to the PCE. That would disrupt the Fed. That would disrupt risk globally. You haven't got that. You've got the risk of 25% on Mex and Canada. But at this juncture, no wielding the axe on China right now, for now.
I still think it's a no man's land for this market because it does believe that we're not going to get anything, that Trump doesn't want to upset stocks and bonds. But Manis, in order to be negotiating, in order to have negotiating tactics, you have to show flex. And what does the market do in that case if it doesn't seem prepared for that?
And this is the other argument. We just had it with Jeff Yu from BNY, which is, are you going to bank more on Doge? Are you going to bank more on deregulation and energy than you are on the ultimate impact of tariffs? But the tariffs pay for, you got it, your tax cuts.
Sequencing matters.
Well, 50% of the tax cuts, excuse me.
Thanks for the clarification.
You're okay. Got to get it right. 2.7 trillion.
But you're right. Sequencing matters. And just in this regard, Trump did waste no time. After returning to the White House, the president immediately got to work signing executive orders, everything from undocumented migrants to returning federal workers to the office.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. NATO has to pay more money. NATO has to pay 5%. World Health ripped us off. Everybody rips off the United States. And that's it. It's not going to happen anymore.
Back with us is Bloomberg's David Gura. David, from the executive actions we got, from what we heard from Trump, what did we learn about sequencing and priorities for this administration?
You know, I've been thinking a lot about his decision not to announce tariffs yesterday, and I think that maybe part of his inclination doing that was he wanted to kind of make that an announcement in isolation, that there were all of these executive orders stacked up. You saw him going through them with such rapidity. Maybe he wants to place more emphasis on the importance of that policy point. But as we heard from Scott Bessent when he was testifying during his confirmation hearing, his priority is on extending these tax cuts that were put in place during the first Trump term, and I think that we're already seeing conversations and studies taking place on the Hill, in the House. That's going to move over to the Senate as well. I think that's going to be a big priority here. Look, we had this February 1st date floated for Canada and Mexico tariffs. I think he will probably stick to something like that for an announcement of that shape. And you know, we've seen in recent weeks leadership of Mexico and Canada commenting on what they might do in retaliation for that. So I think between now and then, we're likely to hear more bellicose rhetoric from both of those sides just about how they would respond if these tariffs are put in place.
Look, very much, yes, he was all about the executive orders, what he can do, rather than he left out a great deal of things that he's going to need Congress to do. Breaking line across the Bloomberg right now, Trump administration, Mull's selling some federal government office stock. Again, this is the Wall Street Journal playing into the narrative, bringing back the federal workers back to work and a freezing hire. So this is about the construct. We're beginning to understand a little bit more about what push Doge is going to have.
Absolutely, and so I think this is something that's still kind of startling. If you go to Washington, D.C., federal workers are not back anything close to every day. If you walk around the Treasury Department, for instance, it seems much emptier than it did before the pandemic, and I think this is something that has been a thing of frustration, yes, to the new president, but also to kind of other supporters of his, that you haven't seen anything close to return to office for federal workers, and so yes, that's one of the executive orders he signed there yesterday. Look, we saw Doge kind of come into its own a bit yesterday. President Trump is taking an existing organization, making that Doge now. Elon Musk is going to have some staff and an email address. Vivek Ramaswamy, we hardly knew ye. He was, announced he's not going to be a part of it. He's going to likely run for governor in the state of Ohio, where he's from. So interesting to sort of chart what the latest iteration of that is going to look like, what he's going to be able to do here. But he has been obviously at Donald Trump's side throughout the transition, basically living at Mar-a-Lago. This is something that's clearly important to him. We'll see sort of how he translates that to actually working to change policies and budgets and staffing in the nation's capital going forward.
There had been reporting, though, that maybe not Trump himself, but some of the staff around Trump had tired of Elon Musk always being there. I guess we had those comments from Trump saying he's not a second president. That is not what Elon Musk is doing. But it seems like he is someone that still has a lot of power in this administration, even giving a speech yesterday, too.
He did. He gave an opening speech at that rally that took place in downtown D.C., and I think that there's still a palpable and obvious admiration that the president has for the genius of Elon Musk, the wealth of Elon Musk, the success of Elon Musk, and I think that continues to kind of animate that relationship between these two individuals. And you heard in the formal inaugural address yesterday the comment from the president about putting people on Mars, obviously something that Elon Musk cares a great deal about and is so tied to his business interests as well. So for the time being, and far be it from me to forecast how long that's going to last, there still is kind of a strong connective tissue between these two individuals. And again, we'll see sort of how long that carries on.
Well, at the rally, it wasn't just him; it was him and his kid on the stage as well. Talk about generations. Look, the president leaned into national emergencies also as well, and this is about the border, and this is about make America safe again. And this, he believes, he absolutely has a mandate for.
He does, and so we heard that in all of the speeches that he gave yesterday, particularly when it comes to immigration, but also to energy policy. But sticking with immigration and border security, he feels like he has a mandate to do more with this. He nodded to the governor of Texas during his kind of freewheeling remarks after that inaugural address that he's going to back him up more, have the National Guard go to Texas and other parts of the southern border to kind of help with kind of stemming on the level of immigration that we've seen there. So I think that that's the thing to watch most closely here, where he feels like he is able to kind of impose new policies and change policies through force, what that means. And of course, there is the specter looming large here in the background of legal challenges, and I think there will be many of these executive orders and immigration among them. But I think, again, when you kind of flood the zone in the way in which he did yesterday, I think a lot of people today are just kind of reading through those executive orders, trying to make sense of what they are, what they can do, what teeth they have, and when it comes to immigration, that's certainly part and parcel.
Yeah, well, he talks about the present danger and imminent threat. David, thank you very much. Great coverage yesterday, you and the team. David Gura there on the very latest executive orders from President Trump. Coming up on the show, We take you to Davos, an exclusive conversation with the CEO of Saudi Aramco. That's next on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bloomberg Brief. I'm Manus Cranny alongside Danny Berger here in New York. Well, the World Economic Forum, it's in full swing. Bloomberg's Jumana Basechi sat down with the CEO of Saudi Aramco. Let's take a listen.
It's still too early. We understand from the news there is 186 tankers that will be impacted. The seaborne that comes from Russia is around 3.4 million barrels. The rest is piped. If you add to that approximately seaborne production or export from Iran of around 1.6 million barrels, so in total you're talking about 5 million barrels per day. But for the Russian tankers that are impacted by the sanctions, the impacted tankers, the volume that you are looking at is close to 2 million barrels per day. So it's still at an early stage. We will wait and see what is the impact of all of these things in the markets. But we started to see tightening in the market.
Yeah. Have you seen any inquiries from Asian buyers to compensate for some of that anticipated supply disruption?
We do have a large customer base, and we have a target every month in terms of governed by the target that we receive every month from the Ministry of Energy in terms of how much we supply the market. The ministry, through their analysts and their work that they do every month, they always try to balance the market. So the targets are matching their view of what is required to balance the market.
But you would be able to provide extra barrels if asked?
Well, you know, we do have spare capacity of close to 3 million barrels per day. So the upside for Aramco, depending on what target we receive, is there. We have the capacity. It's readily available, depending on the targets that we receive every month. But we have demonstrated in the past that that capacity can be brought to the market in a few weeks.
Do you think OPEC Plus will be able to bring the extra barrels back to the market this year without causing a significant shift downwards in the price of oil?
Well, as I mentioned, they do have their own analysts and they have their own view, and they are good at measuring the market and anticipate what would be required to balance the supply demand. And this is where the targets comes to Saudi Aramco and the rest of the OPEC Plus from their different agencies. But it is always looked at in terms of a way of what needs to be done to balance the market.
Let me ask you about demand signals that are coming through from Asia, from China. That was a big swing factor last year. What are the signals that you're seeing there in 2025?
Well, we're seeing still most of the growth that we are seeing coming from Asia, China, India, and the rest of Asia. There is growth driven by liquid to chemical, for example, in China, transport fuel, majority also going as a jet fuel. So that's where we are seeing the growth that is coming. But the majority of the growth that we are seeing is coming from Asia in terms of the demand.
It's interesting what you say about transport fuel in China, because obviously there's been a big shift towards the usage of electric vehicles. Analysts are saying that we're getting close to peak oil demand when it comes to transport fuel. What do you see?
I think in China, as I said, there is a huge growth even for electric vehicles. The liquid to chemical, our strategy is to go to 4 million by 2030, about 4 million barrels per day. A lot of it is going into China. China, why do they need the liquid to chemical as a feed? They need it because of electric vehicles. They need it for solar panels. They need it for carbon fibers. So my point, even for the transition and going to electric vehicles, you need oil as a feedstock to produce the material that would be required for any transition. So the growth is still there. Instead of producing more gasoline and diesel, they are using the feedstock to produce more chemicals. You see a lot of the conversion, the refineries in China, for example, a lot of the one that we are investing in right now, the conversion of liquid to chemical is at 60 to 70%, compared to an average of about 10 to 12% integration in liquid to chemical around the world.
Do you think the market was sort of overstating the state of demand that is coming out of China, and the fact that people have been so bearish about some of the signals coming through there?
No, we're still seeing good demand coming out of China. We've seen it in 2024. We still anticipate, as I said, most of the growth, the 1.3 million, 40% of that growth will come from China and India. The rest is coming from the rest of the world. As I said, China, even when you talk about their move into electric vehicles and renewables and all of that, they need feedstock to create the material that will be used in these electric vehicles and these carbon fibers and all of these things. So we are seeing the demand, and demand is increasing year on year.
Let's talk about another supply driver. President Trump is back. He made a lot of declarations yesterday, but one of the declarations he made was that the U.S. is in an energy emergency. And just to repeat what he said, of course, repeating the drill, baby drill mantra, but he said, we will export American energy all over the world. We will be a rich nation again, and it is the liquid gold under our feet that will do it. What is your response?
I think, the U.S. today is a net exporter. Is not a net importer when you come at the liquid. The 20 million plus million barrel of oil and liquid that is being utilized in the U.S., they export, based on our calculation, close to about 2 million barrels. So they are a net exporter today. At the end of the day, what you need an energy that is affordable, secure, and sustainable. And that's the pragmatic view that we need to see, because you need to ensure that all sources of energies are available, as long as you continue to decarbonize and avail energy that is affordable. And that's, I think, the U.S. will do what's the best interest of the U.S. in terms of maximizing the value of what they have in the subsurface.
The Saudi Aramco CEO describing almost a tightening market with more demand from China and U.S. sanctions on Russia. Speaking there with Bloomberg's Jomana Bersecci in Davos. And we're going to have more interviews from the World Economic Forum in Davos throughout the day. Those will include the IBM Vice Chairman, Gary Cohen, Commerce Bank CEO, Bettina Orlop, and Bank of America CEO, Brian Moynihan. Let's get back to Washington, D.C. now, where President Trump temporarily halted the ban on TikTok in the U.S., granting them 75 more days to reach a deal.
Ooh, look at that. It says TikTok. My, what is that all about? Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner.
Tamlin Basin of Bloomberg Intelligence is back with us. Tamlin, I got to say, time doesn't seem to be TikTok's problem because they've had since last April to find a buyer for themselves in the U.S. What will Trump giving them 75 more days result in?
Yeah, and I think that's the key question. And not only have they had since last summer, there's been all indications from ByteDance and also initially from China that they are not interested in selling. What they were really fighting for and why they took a case all the way to the Supreme Court is they were trying to get this law deemed unconstitutional. Of course, the Supreme Court came back unanimously and said that is constitutional. So I think right now they see the only options now is to potentially comply with the law by divesting.
The question is, what can they do in those 75 days? A joint venture with the United States of America, and people are questioning even the legality of that proposition from an executive order. Who can do a JV with the U.S. government on TikTok?
Yeah, and I think that was a very interesting prospect raised by President Trump. If you actually examine the law that was passed, really what Congress wanted was a complete divestiture. They really wanted no engagement between the TikTok that exists in the rest of the world and the TikTok that is going to exist in the U.S. after this divestment. So I think it's going to be very interesting to see what might be able to develop that really complies with that law. And right now, it's too speculative. We don't know really which direction it's going to go that way.
Tamlin, elsewhere, we learned that Apple, their iPhone sales in China plunging 18% in the holiday quarter. We had gotten some earlier data that suggested a slump in iPhone sales to begin with. We're going to hear from Apple at the end of this month for their earnings. Just how dire do their China sales look at this moment?
Yeah, I mean, this report shows that they look pretty bad. And one factor that we have is that Apple has not yet been able to roll out its AI features in China. It is seeking local partners to help get those features on devices. And I think at the same time, you have Huawei, which is really resurging in China and offering some top-end models that might compete. So I think it's these combinations of things that might kind of explain the slump that we're seeing in China right now.
Tamlin, thank you very much. Yeah, let's see what the AI products that they roll out. Tamlin Basson, there at Bloomberg Intelligence. Coming up, it's already been a busy week, but there's more to come. There are earnings. There's central bank decisions. We'll lay out the landscape for you in just a moment.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's your Bloomberg Brief. Danny Berger alongside Managed Cranny in New York. Let's get you set up for your holiday shortened trading week this week. We're going to get Netflix earnings for the fourth quarter. Those come after the market close. Then we have some data, another round of jobless claims. Those come out on Thursday, and consumer sentiment on Friday. Perhaps a relief also is that it is the blackout period from the Fed, so at least we don't have Fed speakers. But we do have the BOJ announcing its rate decision also on Friday. And Manus, the narrative for them had been CPI data last week allowed them to hike. It just all depended on what we got out of Trump yesterday. So maybe the hike, maybe it's all on.
Yeah, certainly many red flags have been raised by Ueda and other people at the BOJ. Some stocks to watch. Apple, we've talked about it. The iPhone sales in China plunging by 18% during the holiday quarter. That's according to some independent research. And Jefferies actually downgrades the stock to underperform. So we're lighter on our feet. Tim Cook, front and center there behind Donald Trump, as you said, yes, it was the tech bros. Intel up 4.25%. UMC says its partnership is on track, and UMC reported its earnings a little bit earlier this morning. Big move on Intel on Friday, Danny. That was a lot of speculation about M&A. General Motors, GM, up 2.125. Deutsche upgrades the stock to a buy. They see the company reporting the high end of their guidance range. But it is ground zero today. These bond markets reopen, Danny, and wow, what a move. FX and rates.
We have to differentiate between what assets are moving on Trump and which are not. It is notable that you continue to have bonds and stocks rallying, but Manus, as we've been talking about today, here is where you have seen the reaction. It is in FX markets. Jeff Yu of BNY talking about this, that if you want to look for a market that is sensitive to Trump, that is prepared for the worst, it is FX with CAD hedges being put on ahead of Trump. The dollar, though it was declining, started to gain after Trump mentioned yesterday that he's looking at 25% tariffs on Canada and Mexico to start on February 1st.
Well, it was like two extremes. Yesterday morning we started the session with gradualism. There won't be universal tariffs, and there weren't universal tariffs. And in the flick of one comment, it was bang, I'm ready to go February the 1st. That's a possibility, 25% on each. But here's the thing, have a look at the bond market. The bond market, and we were just checking this out. It's not 6 days in a row this time, but it is 6 days that has seen a wholesale repricing in the bond market. Long end down 25 basis points, Danny, 20 basis points there over the 6 days. This is about the worst case scenario perhaps being avoided, and the inflation expectations not banging higher.
I have to say, I really think Ian Ling and Abimo got this right, that into Monday, he basically said it will be an event risk, and once it passes, it will essentially wave the checkered flags that bond markets continue to rally. That's what we got. We got an event risk, and the worst of what we expected didn't come to pass. Okay, that's it for Bloomberg Brief. Surveillance is in Davos and D.C. They'll take it from here.
what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The golden age of America begins right now. Today, I will sign a series of historic executive orders. With these actions, we will begin the complete restoration of America and the revolution of common sense. I will declare a national emergency at our southern border. The inflation crisis was caused by massive overspending and escalating energy prices, and that is why today I will also declare a national energy emergency. My proudest legacy will be that of a peacemaker and unifier.
This is Bloomberg Surveillance, live from Davos, with Jonathan Farrow and Lisa Abramowitz.
Live from Davos, Switzerland, for our audience worldwide from the World Economic Forum. Good morning, and welcome to a golden age of volatility. Yesterday afternoon, people got excited, Lisa, about the prospect of the incoming president taking a measured approach with trade. Then he got into the Oval Office and changed things pretty quickly.
Yeah, and this really speaks to the fact that JP Morgan has a war room to look at all of the ins and outs of what proposals are coming out, to really understand what they are, what they could potentially be, and then change it all again the next day when there's some new proposal coming down the pike.
So bad news if you are Canada and Mexico. Maybe by February 1, maybe there might be some tariffs coming your way. Good news for Europe and China. I would say it's far too soon to say good news for Europe and China. Things can change very quickly, and we saw how that played out in the last 24 hours.
What we're seeing right now is we are here in Davos, Switzerland, with, I believe those are afternoon bells. They're actually ringing right now, not morning bells.
I should say good afternoon.
I think that you need to adjust and adapt to the place where you are, and I think that right now we are good afternoon, good afternoon.
You want us to start the program again?
No, I think that this is good. But I think that going back to the whole idea, we start the show with the idea of Washington, D.C., and yet here we are in Davos, and that is all that everybody is talking about, and I think that really highlights the degree of the golden age of volatility, as you put it. This is what people want to know about at a time when the U.S. is the dominant growth engine and the dominant force of change in the global market.
This is not the center of the universe this week, if it ever was. It certainly isn't this week. The center of the universe is Washington, D.C., and we've said this a few times on this program. The president will act and Davos will react, and that basically tees up the programming for the next 3 days.
And basically the reaction is, we're in, we believe in it, we're with you, Donald Trump. How can we get sort of a piece of the dynamism in the United States? And that's what we feel around the board. The issue is, how much does this shift from some of the rhetoric that we've heard at this very meeting in the past number of years?
To your point, and to build on that, if you're in the United States right now, you feel pretty good. If you're outside trying to get in, you're probably pretty nervous and quite anxious, because there is a long, long line of companies that are looking to do exactly the same thing.
Which is the reason why there are so many bankers here who are talking to clients about just how to do that. Big question will be, who will be allowed to do that, how much the regulatory regime has changed, and just how many international companies are looking to become just a little bit more more American.
We'll talk to one of those bankers in just a moment, so stay tuned. For now, though, we have to head down to Washington, D.C. and catch up with Anne-Marie in the nation's capital. Anne-Marie, what a day one. What's in store for day two?
Well, look, we're going to probably get a lot more executive orders. That is what Donald Trump promised, and that is what he delivered yesterday. If you guys have been talking about, it was a flood of executive orders. The priorities, really, though, were things on immigration and also energy, lifting that moratorium on LNG exports, so rescinding some of the Biden-era executive orders we saw, and also adding some of his own, pulling the United States, for instance, out of the World Health Organization. Also, when it came to TikTok, when that executive order hit his desk, he did say, ooh, TikTok, I like that one. Why? Because he feels like he's now in charge to potentially save, and he wants to maybe have a deal, give this social media app a little bit more time to strike a deal. What was so interesting, though, was not in an executive order. And of course, that was explicitly aimed at other countries when it comes to tariffs. That was missing. But we did get a bit of back and forth with President Donald Trump in terms of where he's going with tariffs, and he's eyeing Mexico and Canada. Take a listen.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact?
I think February 1st.
February 1st potentially is going to be the timeline when it comes to Canada and Mexico. Not only is this back and forth, the whipsawing of headlines might be a nuisance for financial markets. What was so interesting is a country that was not mentioned, China. At the moment, President Trump says he was invited to China and he's ready to make some calls and maybe a deal with Xi Jinping.
Anne-Marie, stay tuned and watch this space. I get the feeling we're going to be saying that a lot over the next 4 years. Anne-Marie joining us from Washington, D.C. this morning.
Yeah, basically we're talking about the whipsawing of the news flow that really will impact companies around the world, and they're trying to adapt right now, even as the headlines seem to change day to day.
Joining us now to discuss, I'm pleased to say that alongside us to kick off our coverage of the World Economic Forum, Viz Raghavan, the head of banking at Citi. Viz, it's good to see you, sir.
Good morning, or good day, as we should
say. Good afternoon, I think Lisa wants to go with. How improved is the mood in corporate America with a simple change at the top of the country?
Look, it was improved post-election anyway. So you saw the frenzy, you saw a lot of expectation, the build-up, the anticipation was you could feel it, and I think look, it's risk on. Folks want to go. There's a ton of liquidity out there. There's a lot of pent-up excitement. So let's kind of wait and see.
Which areas are you seeing the most excitement? Is it really foreign companies looking to get into the U.S.? Is it U.S. companies that were stymied because of the FTC under the Biden administration? Where are the areas of the pipeline that are building most quickly?
Look, it's all of the above. I mean, if you look at the valuations of U.S. companies, I mean, we talked about it a lot. You have pretty much 68% of the world's capitalization now in the United States, and that is just increasing by the day. And you're seeing the biggest pools of liquidity all in the United States. So you had the building blocks of even when you look at the valuation arbitrage, U.S. corporates versus even Europe and rest of the world. I mean, there's a massive differential. So and then you have a lot of liquidity. The PE community have $2.5 trillion or thereabouts of firepower, which they've been waiting to deploy. You have and private credit. You have pools of liquidity that is kind of available. So you've got all the building blocks to kind of get this thing moving.
Yeah, go ahead.
Just one point on that on your question. I would say it is U.S. companies have all the ammunition to go outside and within, and given the Make in America, the U.S. nexus, a lot of the overseas companies will look inwards into the U.S. to basically open plant, do CapEx and the like.
Well, that's exactly where I was going to go. You're a global head of banking for Citigroup, which is a global bank and has traditionally stretched its tentacles across the world. How many of your conversations are dominated by the United States right now?
I mean, U.S. is at the epicenter of all discussions. I mean, whether it is at a basic level, supply chains, working capital management, how do we get organized around, dollar flows and the like. You're seeing our corporate bank, our treasury services businesses absolutely kind of, engaged in dialogue around how to get organized. And that also translates into the boardroom. I mean, if you look at, with the valuations currently in the United States, with that comes responsibility, because companies and boards have to say, okay, for this valuation, I've got to show growth. It's either going to come organically or through acquisitions, because shareholders don't have patience. So the minute your growth is not forthcoming, they work with their feet. So guess what? I either have to grow organically or I have to go buy and build. So you then, once again, you have a strong dollar, which is in the U.S.'s favor. You have this valuation. So all the currency is there, the backdrop is there. So let's see.
What I hear from you, though, is not just U.S. companies, not just European companies trying to get into America, but U.S. companies using their very well-valued equity to look at Europe with an exchange rate on their side. How much of that can we expect in 2025? Are you already having those conversations actively with companies looking to pick off European firms?
The tailwinds are all the things I described. You have gems of companies, sometimes we call them good houses in bad neighborhoods, dollar earners, but trapped in certain jurisdictions where there's a valuation, impairment, and U.S. companies are eyeing them. Private equity is eyeing those jewels. The key is going to be around the headwind is going to be, do nationalist tendencies kind of suddenly take hold? If the tariff regime gets kind of heated up. If barriers are erected, by the United States, so who retaliates? How do they retaliate? So suddenly now, if you have a cross-border visible transaction, and suddenly countries will say, "Oh, these are jewels in my crown, not for sale," and then the barriers and the hurdles.
Let's take it one step further. I think a lot of people made quite a lot of the people who were at the president's inauguration, all the tech CEOs lined up. Some people were very cynical, skeptical about why they might be there. I take a very different view of what was taking place in the last 24 hours. That was a celebration of the best of America. The biggest leaders, not just in corporate America, but around the whole world. And we get the real sense now that the incoming president is going to look to protect them and look to go out to places like Europe and say, we've got their back, you stop going after them. Do you expect to see more of that, not just from the Americans, but also from the Europeans and maybe for the Chinese as well?
I do, but let's go back to your question on tech. Tech is not tech alone anymore. I mean, it is a common thread across every industry. If you take auto, it's autonomous driving. It is, if you take, healthcare, retail is e-tail. So even a old-fashioned, very industrial company, when they're looking to acquire, they're looking to acquire in software and all the kind of the tech adjacencies. So you're seeing tech permeate pretty much every industry right now, and and this is something even from a banking point of view, that mining of the seams is something that you need to do really, really well, because that's where most of the activity is going to be. In addition to all the pure tech, like the whole AI space and the like, and cybersecurity. So all of that pure tech is going to thrive, but those tech adjacencies are also going to thrive. So I can almost kind of understand that roster on the front row is really the way, the direction of travel that we were already on, but that's going to get even more pronounced, as we see the administration and the future pan out.
It also speaks to, as John said, the golden era of volatility and wanting to have a foot in the door at a time when there is so much uncertainty and competing headlines. JP Morgan was talking about a war room, trying to understand each headline as it comes out, and they've been up all night. Is there something similar in Citi's banking department?
Most banks have, groups absolutely dedicated to really parsing through every line of what was said, what was not said, what the direction of travel is, and Citi is absolutely at the forefront of, the internal thinking as well as kind of, advising clients on what to expect.
So you've been at Citigroup for now a full year, more than that.
7 months.
7 months. So 7 months, not even a full year, but completed the fiscal year, and it was a very good year. And I'm just wondering how much you attribute that to the business cycle, and how much you attribute that to changes that you personally have made at the banking division.
I would attribute a lot of it to the changes Jane has made. I think she's really, grabbed the business, both from, the stuff that needed remediating and transforming, and also the focus on the front office, the client side, and absolutely kind of dealt with it kind of head on. And when you look around the teams, there's a vibrancy, there's really an entrepreneurial kind of, as we say, we wake up in the morning, there's a spring in our step that you're building something amazing and you're part of something amazing. And that's infectious, and you saw the results, both the quarter and the year, there's real momentum. So I would really kind of, give the credit to, Jane and the leadership team and all the building blocks they put in place that is really now allowing us to kind of, build off that and to take it to the next heights.
As you look around the room,
yeah,
a table full of very exceptional talent, there is one empty seat, the head of M&A. When does that get filled?
I mean, look, I think, that seat is when you look at the bench underneath, we have some outstanding talent underneath. Kevin, who runs the group, is an outstanding M&A practitioner and has been in the industry for a very, very long time. And within each of our industry teams, we have real M&A, outstanding professionals. So we got, the healthcare team is a team we hired from Goldman, and they were right at the forefront of the Johnson & Johnson trade we announced recently. Lilly, so there's a lot of momentum. There's a lot of deals up the pipe. So what I want to really do is kind of really measure a bit instead of just kind of rushing into things. There's a lot of talent, internally, and I just want to kind of take a call on, how the months pan out, what momentum we have, how we kind of, get established, and then address that.
Could you give us a sense of whether there are any active interviews taking place right now?
No comment.
No? So there might be externally, not just internally.
I would say everything, be open to all ideas, but there's such a deep bench there that, I just want to kind of evaluate what I have.
I hear that from you. What I also hear is there is a real potential that the seat just doesn't get filled, and you can accomplish some of your goals without that vacancy being filled.
Absolutely. I mean, that's what I'm saying. The bench strength is so strong that, we're doing all the M&A deals, and if you look at our announced deals, if you look at our pipeline, there is a lot of progress, there's a lot of momentum. So I really want to just kind of digest what I have and then, take a call at the right time.
Sounds like you're ready to hit the ground running. A lot of people are in the United States right now. It's going to catch up.
It is. I mean, this is kind of there's a lot of excitement, there's a lot of anticipation, and all the building blocks are there to kind of make something, out of it. So
the mood's improving in corporate America. This is good to see.
Corporate America, let's emphasize that.
Yes. Well, I have been repeatedly, don't worry. It's very different for everybody else. This is good to see you. Thank you.
Likewise. Thanks
for Raghavan there of Citi. Thank you, sir. Let's get you an update on stories elsewhere this morning. Let's head over to Danny Berger to get your Bloomberg brief. Hey, Danny.
Hey, John. Los Angeles is facing extreme fire risk for a third straight week as hurricane-strength winds return. A rare, particularly dangerous red flag warning has been raised across the region. Wind gusts as strong as 80 miles per hour are forecast. Ventura, Malibu, and San Fernando are among the cities most in danger. Veteran Republican Senator Marco Rubio has been confirmed as Donald Trump's Secretary of State. He's the first of President's second-term nominees to be approved. Rubio served 14 years on the Senate Foreign Relations Committee. He was cleared by a vote of 99-0 in the Senate. Meanwhile, in D.C., Elon Musk has secured a White House email address. The billionaire, who is set to lead the Department of Government Efficiency, also has an office space in the Eisenhower Executive Office building within the White House complex. President Trump said that DOGE will work with the White House to identify spending cuts and finish its recommendations by July 4th of 2026. And that's your Bloomberg Brief. John.
Danny, thank you. Up next on the program, the golden age for the U.S. economy.
The United States will once again consider itself a growing nation, one that increases our wealth, expands our territory, builds our cities, raises our expectations. The golden age of America begins right now.
good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg.
Approach 2.
Live from Davos, Switzerland, for our audience worldwide, it is day one for us at the World Economic Forum. Equity futures are positive. There is tons of volatility in the FX market that we'll be discussing throughout the program. Under surveillance this morning, it's the golden age for the U.S. economy.
The United States will once again consider itself a growing nation, one that increases our wealth, expands our territory, builds our cities, raises our expectations. Our recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy. The golden age of America begins right now.
The golden age for America begins right now, and we've already had the conversation already in this program in the last 10 minutes. For America, what about, Lisa, for everybody else?
Everybody is going to lean in to America and basically hope that that will trickle back to them with maybe diminished tariffs, and that seems to be at least the hope in Davos.
Joining us now to discuss, I'm pleased to say, Becky Frankowitz, the Chief Commercial Officer for Manpower Group. Becky, good to see you.
Thank you. Nice to see you.
You've been here a few times.
I have.
This is a different Davos.
This is a different Davos. I mean, growth is topping the agenda. Practical approaches to things like AI and green are topping the agenda. So it's quite a different year.
What's changed? It feels like ahead of this event, we saw from various companies in America, they were pulling back from DEI initiatives, distancing themselves from things like ESG, net zero. What's behind that? Just one man, one shift, or is it much bigger than that?
I think that it's a shift in how people are thinking about the workforce, but the truth remains, diverse talent is what drives better results. That's still proven, it's still true. So I think companies now, as we talk to companies around the world, they're saying, we're not going to lead with it in terms of our marketing, but we're still going to do some of this behind the scenes because we need to have workers in the workforce, and we're not getting a new population.
There's a question about that new population, immigration, and how much that's going to potentially upend some of what you track every day, which is a labor market in the biggest and the most dynamic economy, and that is the United States. How much is that top of agenda for the people you speak with?
Yeah, I would say really not at the top of the agenda. If you think about the labor that's coming into, it's a lot of jobs that historically are not tracked in the BLS, indicators. And so I do think it's going to cause a tightness of the labor market to get even tighter than it is today. And that is something we have to keep an eye on as employers. What happens to wages in that environment? What happens to flexibility in that environment? So I do think we'll see a tighter labor market if the immigration reform, not just reform, but the challenges that, we're going to start deporting people if that actually happens.
So this actually is a real question that people have, just how tight the labor market actually is at a time when some people, at least as recently as last November, were talking about a weakening U.S. labor market. Are you saying that the tightness is still there and that just a little bit of distortion from immigration could really cause wage pressures to arise anew?
Yeah, so first I would say the U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. We've held unemployment fairly steady, workforce participation fairly steady, and we haven't overheated at numbers that traditional economists would say would be overheating. And so that'd be the first thing I'd say. Second, any pivot, boomers retiring, any loss of workforce participation is going to be a challenge, particularly with skills assessment and the fact that we need new skills for, new technology.
Can you build on that? What is the talent gap like right now?
Yeah, so we just did a survey globally and in the U.S., and over 3/4 of employers are saying they can't find the talent they need. Now, talent they need could mean quantity, it can also mean specific skills for new roles. And so we're seeing a two-sided pressure. We don't have enough population, and we actually need specific skills. And we need to upskill and reskill our workforce with an employee who feels more empowered than ever post-COVID.
Are they worried that they might not be able to import that talent in the years to come?
Yeah, very, very concerning. We'll be keeping a close eye on H-1B and what happens in that environment. But having talent where we need it, when we need it, John, will be the question. If you look at global population growth, the U.S. continues to hit